So everything basically boils down to growth, which leads to fiscal and monetary policy. So I think uh, like we should probably start with talking about like if anyone has any sort of inclination to think about XYZ for growth for XYZ area, we could talk about that first. And then it's going to lead to talk about like a rates, liquidity, bonds. Then it's going to lead to talking about risk assets and stocks and crypto. And after that, if anyone has like an additional thing they want to add that they're going to be doing for 2024 outside of this base topics.
Sounds good
Right.
to me.
Does that seem okay? Does anyone have anything to add?
Nope. Sounds good.
All right. Yeah, it's time now. Okay. Let's start then. Okay, let me say the first item on the agenda is basic growth. And okay, let's talk US, Europe, China, and anything else that anyone else is dabbling in. Okay, so let me start by like anyone, if you want to add anything, jump in with anything, feel free to do that. Okay, let's start with US growth. So labor market seems to be moderating, but not really, because the latest jump in unemployment rate to 3.9 seems to have coincided with the strikes. And after the strikes have resolved, like it's back to 3.7, there's wage growth. I am getting really concerned that that thing is not going to weaken next year. I mean, there's anecdotal talk about like slack accumulating from like Fed speak with their private contacts, but I'm not sure I'm buying it, you know? Like, is it is it gonna be like a redo of 2023 where US growth is gonna fucking punch everybody in the face by being overly strong next year? Like, I
Oh.
find that very concerning.
It always boils down to the saying that you should never underestimate the US consumer, right? It always boils down to that.
But
Every time.
in 2018, why was everybody freaking out over close to 3% rates? Like, the latter end of the hiking cycle, everybody was freaking out over 3% rates.
Well, it's the same again in 2023 as well, right? Well, actually 2022 already, 2023 as well. If
Like,
you, well, I'm always looking at it from a household perspective, and let's say you just, the normal consumer in America, you have some loans on the side running because you bought a house or whatever. But is that really doing a lot to your spending if rates are going up from 3% to 5%, or let's say from 0 to 3%? Is that really having that big impact on your spending? And in my opinion, no, not really on the consumer. The only thing that is really sort of going down, in my opinion, is investment. Of course, because at 0%, some businesses are way easier to fund, um, and some investments are making more sense with rates at 0% than at 5%. But as in my opinion, it's not doing a lot to the consumer, and we all know the U.S. market is simply running on the consumer spending. So,
I mean, it's supposed to go through the financial conditions, then into
of course,
sensitive
of course,
sectors, and then into the broader economy. Housing
of
kind of
course,
paused, didn't really drop that much, just like a little bit of like a middling pause. And okay, so something that I found significant was during the October and the preceding month, September, October, after the US increased the size of their issuance on the long end, and we had like a huge bond pube on the long end, and we had like a sizably large yield rally, like spike in yields. And those 2 months, we had significant deterioration in data as well. Like in the forward-looking data and ISM new orders, they were kind of meh. employment, unemployment, and everything started going in the other direction when rates fell back again in November and December. So I'm looking forward to seeing the next week's data. We have NFP,
for December.
ISM, December, when rates were already at September, pre-September levels, more or less.
Yeah.
So the rate panic is removed from the pricing, and we can see the fuck happened to spending. If this is not accelerating again, then I'm willing to buy the narrative that things are actually slowing down. But
To be honest, I too think things are slowing down. It's just probably not at the pace that some are believing currently. I truly think the market got ahead of itself again in the last couple of weeks.
Yeah, I saw that you're writing that you got out of your TLTs again, so
yeah,
you're not particularly convinced of significant growth hit.
I truly think the market got ahead of itself a bit, and
yeah, I would really hate if we get like a repeat of 2023 in terms of growth for US or 2024. That's gonna be a pain in the ass, because we are gonna have a different liquidity environment next year. It's not gonna be like last year. That is gonna hurt. If Fed can cut rates, that's gonna hurt next year.
That's what
purely
I think
due to the liquidity environment.
That's what I think as well. But if you just look at growth, I think America is doing fine. It's just doing fine in 2023.
Oh yeah, the expected divergence does not seem to be reflecting in FX rates. At least Euro is rallying. Like Europe is going to be fine. All right. Anyone else has anything to add about U.S. growth? Like, it's a well-trodden ground. The risks of an overshooting growth, unknowns. Anything to add about U.S. growth? Doesn't seem like it. Okay, Europe. I mean, is there anyone who actually likes European growth in this group, in this setting? I mean, again, well-trodden ground. We have a good collection of haters for Europe. Yours truly.
Let me see. We have me, Victor, Allessandro, and Sandro all living in Europe. All living in different countries, I think.
One of the Bloomberg headlines flashed before in my notifications about two large Austrian real estate firms who are filing for bankruptcy or something like that.
Sigma Tech, Sigma Holding is I think probably the biggest real estate holding in Austria. They filed for bankruptcy, but it was a bit early already this year. But that is all down to that's a tax evading thing. That doesn't really have anything to do.
About demand. It's not about demand picture.
Yes and no. Yes and no. It was it's a bit a double thing. Hi, Victor.
Hi.
Nice to meet you.
Nice to meet you.
So the Sigma Holding thing. That's sort of down to more a tax avoiding thing rather than demand going so much down that Sigma Holding is going bankrupt.
Okay, so why is ECB so confident that they're going to be able to keep rates high? PMIs have been in the shitters for many months, in like low 40s, not 49. No, they've been in low 40s. The economy is contracting. Okay, there was some stagflation, like inflation didn't really slacken, but labor market is not tight at all in Europe. I mean, their natural rate of unemployment is like 7% or something like that. It's not like 3% like in US. So, I mean, Don probably thinks that euro-dollar shorts are like a great trade for next year, but there seems to be some consensus building that the dollar is going to do poorly next year, maybe even against euro. The fuck is that about?
Yeah, I was kind of confused about it as well.
Because Fed is cutting rates, there seems to be some consensus building that dollar is going to be doing poorly next year. I mean, Fed might be cutting, but everyone else should be cutting more and faster by all rights.
Well, you just have to go by the market, and the market currently is pricing in that the Fed is cutting earlier and further in 2024 than the Fed, than the ECB, sorry. So, of course, the euro dollar is going up because of the yield spread widening again getting closer to it, for the euro. So, of course, the euro dollar is going up a bit right now, but as soon as we face reality and Europe is going down, ECB going to cut earlier than the Fed, market has to reprice it again, you know. So
when is that going to happen, though? What do you expect? When is that going to happen?
Is it gonna happen? Well, of course, that's the big question. In my opinion, yes. I think the ECB is just, bluffing like a poker, because at some point you have to. Same as they did in 2021, 2022. They always said, no, we're not gonna hike rates, right? Until inflation was at what, 6% already, 7%. And then they said, okay, you know what, we're gonna hike now. It was just too late, way too late.
Nobody could have seen this inflation coming. Lagarde was completely ignoring inflation and energy price spikes toward the end of 2021, before the war, I don't remember. At some point there was an energy price spike, and Lagarde was pretending that it was not gonna. ECB does monetary policy by looking at their own forecasts for inflation and treating them like fact. They forecast inflation. ECB is like, that fucker is still working at ECB. That guy should have been fired ages ago. Like, everybody with two brain cells to rub together could see that huge spikes in energy prices in 2021 were gonna feed into inflation. But no, ECB's own forecasting modeling predicted inflation was not gonna exceed 2% or whatever in the medium term, and they didn't hike rates. And when what was everybody expecting actually happened, they're like, oh, nobody could have seen this coming. And our forecasts are not reliable anymore. No, you are just relying on a mechanical formula. And again, they're doing that. I mean, right now they're being cautious because they think that, okay, beside all of that, like, there seems to be some core disagreement among everybody about, like, okay, so we expect ECB to cut, we expect Fed to cut, and there are going to be divergence. But I think the core of it seems to stem from people disagreeing about stickiness of inflation. There seems to be a sizable group of people who think that inflation is in a new dynamic, like a new 3% inflation world. That's why the new normal is different. That's why there's some stickiness. Like, I think we have some people like that here as well, right? Like, I haven't seen no reason to think that, but there seems to be some. Not everybody's thinking that, but a lot of people with a lot of money seem to think that we are in a new world with inflation running above 2%. That's why the normal R star, the neutral rate, is much higher than it used to be. I mean, fucking Atman was selling that idea and shorting bonds.
Yeah, 3% long-term inflation.
Yeah, 3% inflation, 2% term premium, 5% 30-year rates.
Yeah.
That was his premise when he was.
Well, he can be right though. He can be right, and he caught the button, so you can't blame him.
Yeah, that hurts me. That hurts me.
Yeah, me as well. The thing is, as long as fiscal spending is keeping up as it is, why shouldn't we have 3% long-term inflation? Inflation market is always this big fucking pendulum. I'm always compared to that. You dip the pendulum to one direction, right, into the inflationary side, and then it's there. And then if we let it go, it's just going to the other side, right? And we have deflation, big fucking deflation, and then it's always pendling. And in the middle we have, who knows, 2%, 3%. Nobody really knows. But in between we can have let's say -2%, and it would just be on the deflationary side for a year or two, and then we go in the other direction again, and we have 5% again in another 2 years. Who knows, right?
Mm-hmm.
It's always that's the market cycle, right? It's always up and down. We always have hiking rates and then cutting rates, and it's always just.
I think cycle affects growth like that. I don't think it affects inflation like that. I think inflation is not.
We could have a shift because of fiscal spending, right? After COVID, it's possible that COVID turn everything around.
Well, exactly. I don't buy that. That's exactly what people argue, and I don't believe it. Why? What changed? What changed between 2019 and now?
Fiscal spending changed quite a bit. Everybody is just spending like no tomorrow, and if that is not changing, we may have 3% inflation. Who knows, right?
I mean, the deficits are due to debt financing, not direct spending. I mean, direct spending didn't really increase aside from one-off spendings. I mean, in terms of fiscal spending, we have not seen any new programs emerge that are long-lasting to create a different demand dynamic. I mean, yes, fiscal deficits are rising due to financing costs of existing debt.
Yeah. I would say we have new programs that really have a direct impact on spending. Yeah, on the fiscal side. As example, in Austria, we have the so-called environment bonus, which everyone is getting. Like everybody gets, I think it's 500 in a year, something like that. Like just to check.
I mean,
500
is it still
euros.
a thing? Is it still a thing?
Yeah, that's still a thing because of rising electricity prices. The government is still paying that, and I think Germany has the same or something like that. Not sure about America, but I think Europe has it pretty much everywhere.
Okay, we
I think
stuck a bit in this area a bit
something
too
as
much.
well. I think from the government, right? I think.
Yeah, we got stuck in too much of a macro debate. Let's get to growth for China. I think they have stabilized. I think they are turning in the other direction. I mean, property prices fell, and by some reports, it seems to have fallen by something close to 30%. But it seems to have stabilized with their like piecemeal. Where's that from? Yeah. Anyway, it seems to have stabilized. So I am again bullish on China with the caveat of communist and geopolitical risk. Dude, the multiples are so cheap in China, like so cheap. Like Jack in another group. I don't know if you've been looking. He's been buying the BYD stock, electric car company. Okay, electric car company. This quarter they exceeded Tesla in becoming the world's largest EV manufacturer in terms of sales volume, in terms of sold number of cars. Their profits last year was about the same as Tesla. Their expected growth forward is about the same as Tesla. EV manufacturer sells more cars than Tesla. Same profits, same growth expected. 12 times smaller market cap. It's a China discount. And of course, they're a bit of a different segment. Probably the people don't think the margins are sustainable. I don't know. But purely because of the China discount, there's like a 12x difference in market cap. Like what Alibaba is trading at 7x earnings, something like that. It's a growth tech company.
Yeah.
Like US ones are trading at close to 20. That one's trading at 7x.
Yeah.
China has huge discount. Like that's why before market close today, I bought MCHI. I did the thing again, put some money into China, but
Let me check MCHI. Let me check that.
Are you still worried about the big building company in China? I don't remember. I don't remember the name.
You mean? Evergrande, you mean? Yeah, I mean, there were some more bankruptcies, more problems, but that situation seems to have stabilized it's not over, but it seems to have stabilized. I mean, that was just like the earliest one. There were many others after that. But it's about the real estate market back to that again. But I think that's. I mean, the biggest risk with China is that everybody's afraid of Xi Jinping. Everybody thinks that he's a communist, and the capitalistic policies are not reliable to continue.
Weekly chart down MCHI.
Yeah. Look at KWEB, the tech company ETF.
A what?
KWEB.
Oh yeah. Crap.
Yeah. These are
Insane.
Chinese tech companies.
Yeah, like we're talking about fourfold here to the highs.
Yeah, it's like what, 75% lower from all-time highs?
Yeah. Yeah. Fourfold until back to the highs. And those highs been in early 2021.
Yeah, right after COVID.
Insane. Quite insane. Well, I like this one.
If there
I
is
like it.
if there is some sentiment change around China, I think there's going to be like a crazy rally in China. Like people just need to stop fearing investing in China. Like, remember the famous George Soros article? He was making fun of some investors who are investing in China, saying, "Okay, the fundamentals of politics actually changed. You know, we don't have any more capitalists. Like, we just got only communists in leadership due to Xi Jinping." Capital Ventures, probably your people. Yeah, some guy, Mohammed Capital Ventures, tried to join. He's not clicking the link. Anyway, so anybody else is invested in China? Are you buying anything in China? You're not looking.
No, not at the moment.
Because I think like Jack was buying for long term. Two stocks: Xiaomi, BYD. Xiaomi is starting to make electric cars.
Well, let me see. BYD, right?
Yeah, BYD.
Yeah. Is it actually this? No. Let me see. It has to be this, right? Limited Futures Company.
Okay, if
Hong
you
Kong.
want to look the direct BYDDF, you can search for that.
Yeah. Yeah. That actually had a huge rally in 2020.
They had a huge rally. They had a huge rally, but still, you know, they are what, $70 billion company. They make more cars,
nothing.
electric cars, than Tesla. They
Yeah,
have
well,
the same
but then-
profits as Tesla.
But then you gotta look at Tesla and think, Jesus fucking Christ, that thing has to come down big time. You know what I mean? So you can't just say it's the same sector and the same margins and whatnot in Tesla, and it's trading at 12-fold. But then you gotta think to yourself, Jesus fucking Christ, Tesla has to come down fifth, you know? So it should go from 250 to 50, and then we are down to what? 2-fold? Something like that. So it's all gotta be, you know, a bit more relative.
Yeah, but then you can bet on the convergence, you know, short Tesla, buy BYD.
Yeah, of course. Yeah, that would be an idea. That would be an idea. But this has, yeah. I don't want to talk about it, but it has to go down like, you know, 75%, stuff like that.
Yeah.
Jesus
You
Christ.
can bet on the convergence between them, but look, literally,
Yeah.
same sector, sells more cars, same profit, same growth, 12 times difference in market cap.
I
mean, it's
just
mostly
don't.
the Tesla craziness, not more than anything.
I just don't want to bet on the EV market. That's my problem, you know. I don't want to bet on it. I want to bet on China. Yeah, I'm on your side there. She's saying that he wants to curb the economy again is a huge green light for me. But
Okay.
No way I'm
So
gonna
what
back on the EV market. No way.
what needs to change in China? Something very small needs to change in China. Maybe China will be safe to invest after they recapture Taiwan. Maybe the war is actually a good point to buy because the like long-term question will go away around this risk. But dude, China is a major superpower. Their biggest problem with investing in China is they're not a capitalistic country. So this you're not a priority as an investor for the Chinese government. And you were a priority until Xi Jinping came and fucked everything up. And because of that, we are 75% lower from all-time highs after he consolidated power and Premier Li Keqiang died of a heart attack all of a sudden.
I remember that.
Yeah, man. That guy was the leader of the pro-market people. And after he got booted from the Politburo, mysteriously died of a heart attack and got quickly cremated so that nobody could do any kind of autopsies or whatever. But anyway, I don't want
Suspicious.
to get hunted down by China. So let me just shut up right there. Yeah.
Yeah, but I'm fully on your side. I like China going
I think
forward.
so. Jack and Alessandro were talking about long-term investment. I think a 10% stock allocation in China for the long term is a good idea here, because I think in 10 years we're going to look back and think, oh my God, valuations were so fucking cheap. Like multiples were so fucking cheap in China and we didn't buy this. Like if you believe that China is going to remain a capitalistic, more or less country,
I mean,
yeah, we can't
if I may ask, that's a good theory, but
yeah.
with this whole looming idea of a recession coming, when would be a good time to get into something like that?
For China or for US? Because they're
For-
going to have a different timeline for recession.
For China.
Yeah, I think they are just getting out of recession now. Their version of recession. I think they're turning the corner.
Okay.
I think they are past the worst of it.
Okay.
I mean, liquidity environment is global, you know. So I think now, right now, today is a good time to get into China. I bought it before close myself. So I'm not saying nothing out of thin air. Like at 3:30 p.m. today, I bought China.
Okay.
But for the long term, you should take into account, I believe, the geopolitical risks.
Yes, that
Yeah,
is
exactly.
already reducing multiples. Like right now, so companies trade at forward earnings X a number, which is a multiple, what we call multiple. This is the stock prices. China is trading at very, very low multiples, like a growth company like Alibaba is trading at 7x. The tech company, growth company, AI company, they have like a cloud service and everything. The US equivalents are trading at close to 20x. So if they projected
Nvidia is way higher, it's like 50.
yeah, I'm
It
being
was like
conservative,
100.
like taking the Magnificent Seven average. They're trading between like 16 and higher.
Probably
Alibaba is trading at,
I would say 2025 is a good average because that's around
yeah.
and all those platforms.
Alibaba is trading like a utility company, like somebody who doesn't grow, somebody whose earnings don't really grow that much. They grow at a pace of the economic growth. Alibaba is trading like that. A lot of Chinese companies are trading like that. They're making a shit ton of money, but people are very scared of the future. Because of that, they're trading at a very low multiples. So I think either until, okay, so the big risk, the possibility to be wrong catastrophically is there if there's a war with Taiwan, the communists completely take over. I don't know. But if you believe that all of that is going to be smoothed over and the Chinese going to remain capitalistic, I mean, of course, it's not 100%. There's a balance of risks. But on balance, that's why I'm not saying put 100% in China, but I think, like, you know, in 10 years, I think after the Taiwan war is over and everybody has forgotten about everything,
It's gonna be a
I
pretty
think
safe bet. Yeah.
people are going to regret. I think people are going to regret not snapping up this opportunity in China because multiples are cheap. China is very
Do,
cheap.
do you think that geopolitics are the real risk in China right now?
Right now, no. Today I saw a headline on
No,
Bloomberg.
going forward, I mean. Going forward.
Okay, so let me say it this way. Today I saw a headline on Bloomberg that China set a new defense minister who is more known to U.S. and more friendly. Remember the last time got kicked out of the corruption due to corruption or something like that. So China set up a new defense minister who is friendlier to the U.S. and the narrative was that this is going to de-escalate tensions. Recently, when U.S. was posting fake news about Xi Jinping threatening to invade Taiwan, like somebody was posting that fake news. From the previous summit, they were just taking Xi Jinping's everyday comments and making them seem more threatening. Someone was doing that. I don't know who was doing that, but someone was doing that. The Chinese immediately, through the Hu Xijin, the Global Times editor guy, he was posting first. His message was, people who are worried about war in the Taiwan Strait can breathe easy because the summit, blah, blah, blah. Basically, he was immediately pushing back against China risk. So, in my view, the geopolitical risk, there's an election coming up in Taiwan. That will be determined. That will determine if the anti-China party gains more foothold, and if U.S. next year we have elections all over. So I think the outcome of this election, what happens in Europe, what happens in U.S., what happens in Taiwan, will determine whether China feels like it can actually do something about Taiwan or not.
Okay, let me rephrase it. Do you think, or what is your risk list for China? Is geopolitics on top of it? Because in my opinion, it would not be on top of the list.
Right now?
I agree.
Yeah, going into 2024,
Going into 2024? No.
Yeah, just
not
going forward now.
Just economy and stimulus. For the next year, not geopolitics. I don't think geopolitics is a big deal anymore. There's going to be a lot of tough talk from U.S. due to elections towards China, but I don't think anything material will happen next year until elections. So whether they stimulate their economy, I think internal economic situation is the number one question for China next year.
What about liquidity in the overall market?
China is, they have almost deflationary problem, so central banks are resistant to pumping more liquidity.
PBOC is cutting rates, right?
Yeah, but they're being like, we don't want to cut too much, we don't want to stimulate too much, we don't know.
Yeah, they're on 10 basis point steps, right?
They're being very, very tentative.
Yeah, but Talion, the question was about buying stock long term, right? Mm-hmm. So if you are into 2024, say you have, I don't know, 100K to lump sum into the market, mainly stocks. I mean, what percentages are you going to buy? How much weight are you going to put into China? More than, say, I don't know, 20%, 30%?
Myself.
Yeah.
Since I am monitoring all the time, I am probably going to put everything that I'm planning for stocks because I don't see any place better than China right now. But if someone is planning to do it long term, I would say 10 to 15% is good.
Yeah, let's not say 30 years, which is kind of a lifetime investment. But let's say 10 years, yeah, which is long term. How much would you do?
10, 15% seems fine to me because that thing, like
20? 20%?
Yeah, 10 to 15,
okay.
Somewhere like that.
Yeah, amazingly likely. I mean, if you buy a total world stock ETF, like something like BT in the US, I think you're buying something like that. I mean, the emerging market weight is around 12%, I think, and most of it is China.
Yeah, that
So
makes sense.
basically, if you're buying a well diversified enough stocks ETF, I think you're buying enough China already without going to have to overweight it yourself.
Yeah, that makes sense. That seems fair. Now, I just like China right now
Yeah,
because there's
but if you
everything
want
is
to
super
avoid
cheap.
something like, I mean, I think we can all agree we want to avoid Europe going into 2024 and maybe
Yeah.
the next
I
five
don't
to
know.
10 years.
Someone is buying Europe. That shit is rallying. I don't know anybody who likes Europe, but somebody is buying that.
Yeah, but I mean, I don't know if I want to avoid Japan and Australia as well when I buy,
I don't know anything about
a
Japan,
total
so
world.
no comment.
So we're buying United States and China here, right? I mean, no, not much else. We're not discussing
I am
anything
not.
else.
I'm not buying you. No, no, no. Okay, so Capt came in a little bit late. So I was saying, okay, we're gonna discuss growth and the economy first, uh, then rates, liquidity, bonds, then risk assets, crypto, and anything else. We're not particularly discussing portfolios. Like anybody who has something in their portfolio can comment anytime if it's relevant to the discussion. But right
Okay.
now, no, we just got over talking about growth in US, Europe, and China. So I was
Okay.
saying,
Okay.
I was saying like I think growth has turned the corner in China, and it's a good time to be buying China for long term.
Yeah, I agree, and I agree with Dom when he says the geopolitical risk is basically nil. Even if a war happens, I don't think it's going to matter much in the next 10 years, say.
Yeah, I will just say only about for next year because I don't know. Like elections
Yeah.
everywhere
Okay.
next year. I think that's
Yeah.
going to
Okay.
determine what's going to happen going forward. Everybody is hating on China right now. The sentiment's at rock bottom. Multiples are super low. Economy turns, people stop attacking China. I mean, sanctioning tech and whatnot. And
Yeah.
the sentiment needs to turn a little bit. There needs to be a little bit of animal spirits and optimism. I think China takes off like crazy.
The funny thing is, you can make the same argument about Europe as well. Everybody's hating on Europe. Sentiment is rock bottom.
Europe has not been growing. Europe has not been growing like China has been growing for the last 30 years now. China has actually delivered on this promise of value. Europe has not.
Of course, yeah, which is the joke.
Yeah, I mean, literally, it's a fair statement. I'm literally arguing value proposition for China. But China is actually a growing place, not like Europe. Okay, so
And what about both India growth and on
I,
one side and Mexico getting facilities that previously were in China?
I think
How
they're both
can
great. I think they're both great. I think India and Mexico are both great, well positioned. But they're Mexico is fantastic. The reshoring is not going to US. The reshoring is going to Vietnam and Mexico and stuff like that. Not back to US. Nobody wants to pay the US wages.
Way too high wages.
Yeah. So Mexico is super well positioned for a lot of US reshoring. So there's like probably a secular 10, 15-year trend of very nice growth in Mexico. Same thing in Vietnam. A lot of things that are moving out of China but are West friendly are going to Vietnam.
But you think it's going to reflect on the market cap as well? Because you can say, I mean, China is like the second largest economy in the world, but doesn't have it's a small market cap compared to the rest of the world.
Yeah. Yeah.
So I think with Mexico and places like that could be the same. I mean, they're probably going to capture a lot of, mainly the United States, bringing back their production home closer to the United States, and they already have. I think you sent something about that a few months ago on the group. It was uncanny how much business China has lost already to Mexico.
Yeah. It has happened, but it's not always just about the trade when you're a big economy. China has been trying to move away from export-dependent economy to local consumption economy. They're trying to rise with their own weight now instead of just selling everybody shit.
Yeah, but the question is it going to increase the market cap? Because if I'm buying, I mean, stocks into Mexico, that's what I care about, I guess. You know,
Oh,
or any
I
other
cannot
emerging
exactly
market.
comment about which vehicle would be good to invest in Mexico. I can just say the growth is going to be good in Mexico. And if you actually go and start a physical business in Mexico, you're probably going to do well. But I don't know what they have available in an open market to buy. I don't know that.
Okay.
But if you are looking for a country to move, if you want to start some business there, go to Mexico. I mean, I thought myself about going to Mexico. Like, it was a close call. I was thinking about going to Mexico myself. I like it. I like the idea. It's really great.
If you want to invest in stocks, just as a note here, if you want to invest in stocks in a foreign country like Mexico, just be sure that you know and understand the currency devaluation, or the flows of it, because that can depreciate or appreciate the stock value quite a bit. So whenever, if the Mexican peso is rallying, then the stock market is likely not rallying as much, right? So you gotta care about that as well, and hedge yourself in the currency market too.
Yeah, but as Europeans, most of us are, I guess, here. We're already exposed to the kind of currency volatility on the markets. Usually on stocks, it doesn't matter much, I guess, on the long term at least, mainly against the United States dollar. It doesn't matter much. That's why you never hedge your stocks, and you hedge your bonds usually.
Well,
I mean, if I was buying Mexico, I would buy unhedged. I would not hedge.
Yeah.
I would buy unhedged if I was buying Mexico.
probably.
And I'm bullish on the currency and the stock market, both. I mean, I got what you mean. If you're investing in the foreign land, you got to think about the currency risk as well. But yeah, for Mexico, I would probably buy unhedged because I'm bullish on both their currency and their market, their growth. I mean, I don't know.
I'm just saying, if you're in Europe, you probably, you want to buy the stock market and probably just sell the euro peso as well, just a bit on the side to hedge it. That would make sense a bit.
If you sell euro peso, you're buying double peso.
Yeah, because I think the economy in Mexico is doing good, so the peso is doing good. Stock market is not going to rally as much because the peso is gaining value. So you're selling the euro peso.
That way you're not hedging, you're double betting on the same thing.
Of course, because if.
Oh yeah, okay. So you're arguing for double betting. Oh, okay. That was not actually hedging though. That's betting on the currency and the market. If you want to just hedge away the currency, you have to short peso. So you're saying it's either one or the other is going to rally. I mean, you have to look at the cumulative rally, right? That's what you mean. So that's why. Yeah, that's why you have to. Yeah. Okay. So. When you actually buy, you can do it you can buy unhedged, and that means you convert your euros to peso and buy with peso Mexican assets. That's going to cover both. So you're going to have a peso denominated asset, and when you sell it, you're going to get pesos, so you're going to capture both.
Yep.
Okay. Okay. Any other interesting place in the world?
Yeah, actually,
Mexico, I like Mexico.
I just have a quick little question too, so regarding China. So since you said China has already kind of had their version of a recession, and we know that obviously Australia is directly correlated to the situation in China. Does that mean that the current situation in Australia, where they're kind of still battling inflation, is not going to get resolved anytime soon?
I mean, inflation in Australia is more about Australia, though, not about China.
Okay, so there's still that risk that they can still get a good pullback.
I don't really watch Australia. All I can say is inflation in Australia is about Australia, not particularly about China. And they have high inflation and tight markets, tight labor markets, right? Compared to, because
Yeah.
there was like a prospect for like a divergence for like a tighter monetary policy in Australia. I mean, their central bank sucks. Their central bank.
Yeah, but divergence is still there going into 2024. Though. They still have too high inflation. They still gotta be hawkish. But we can discuss that later in the rates.
Yeah. Now next is the rate section.
Oh yeah. Can we? Does anybody have any idea about Japan going into 2024?
The zombie guy has been fooling everybody.
Yeah, I don't think even they
giving
know what's going on.
hot and cold statements.
Because Japan is just I can't wrap my head around it. It's just so strange and insane. It's just I don't know.
I mean, I am sympathetic to what Ueda is saying. They've been stuck in this low inflation regime, so they're trying to get out of it. But everybody else found out that if you poke inflation, the sleeping lion, and if you wake it up, you might not be able to put it back to sleep again.
But what is happening as soon? I mean, I think we probably can agree that the BOJ is going to end the low rate environment in 2024, or at least starting to end it.
I think what will happen is they will lift the band to what's it, 1% right now, right?
It's at 1%, I think. Yeah, it's in the.
I think they will lift the band to 1.5%. They will bring rates to zero, and that's going to be the end of the hiking cycle for BOJ.
You think so?
I think there's going to be a 10 basis point hike to zero, and I think they're going to lift the band to 1.5, and that's going to be the end of the hiking cycle for BOJ.
That would be crazy. That would be just crazy. Okay, what is happening then? I mean, I looked at the Nikkei the last day, and that thing is just nuts. Like it's currently trading at 33,000 around for end of the year. And that thing is up from 26,000. It's like 7K. That's, what is that? Let me see.
23%, something like that?
28% a year in 2023. That's like, is that better than the SPX? I think so.
That's almost, SPX is like 24%, I think.
It's just, I don't know what to do with it, really. And if you think that the yen, what is the yen doing, If they don't hike too much, if they don't end the low rate environment too much, right? And if they don't tweak the yield curve control too much, why shouldn't the stock market rally quite a bit next year?
No,
right?
Well, it can.
You know what I mean? Because we probably see, maybe the base case for everybody is that the yen is going to rally, and that will probably crash the stock market as well quite a bit, right? But what if the whole thing is crashing down again just because of the low rate environment? And then we could just see the stock market rally just again, probably 10, 20%, 25% again.
I think that can happen. I just don't see how BOJ can hype that much.
Yeah, I don't see it either.
So reluctant.
And that's the thing.
So reluctant.
I don't see it either, and that's my idea though with the stock market. I really like to put some money into Japan, to be honest.
How long have they been at minus 0.1? 30 years?
Fucking
30
ages.
years?
Ages.
Like accumulated debt is a lot at that rate.
Yeah.
So this is actually how I look at the inflation versus rates and growth thing. There's a rate, and that rate leads to debt accumulation long term. And when you hike rates, since the debt is growing faster than everything else, next cycle you have a lower neutral rate. And again, the rates are cut, more debt is accumulated, and again, you go to a lower R star. So I think we are there again. I think neutral rate is lower than what it used to be in 2019 right now in the world.
Well, it could be. but just just Japan specific. I don't see them hiking a lot, and I don't see it.
I think they're going to do 10 basis points, and that's going to be it. I think globally inflation is going to come down and the timing is going to coincide, and they're going to do 10 basis points, and that's going to be it. I don't believe anything more is going to happen on that front.
But then we have a perfect setup for stock market relativeness. If there is no other big issue,
but I don't want to buy stocks for that kind of reasons. I don't want to buy stocks when I'm buying on some policy magic reasons. I want to buy stocks when I see good growth.
You can't have everything.
You can't have everything. But I'll just skip it. That's why I'll just skip it. I don't want to buy stocks due to policy magic.
That's why I was asking about growth. If anybody knows about growth in Japan going into 2024,
I don't know much about Japan anyway. Where is Sebastian? We need to hear some crypto talk.
Yeah,
that guy.
Yeah, Roding. I mean,
we need to get some insights about crypto.
No, I mean, he has to be here. He has to. At least once a year, I want to listen to his, advice.
That guy is has been doing well last cycle and right now as well. Like, I would trust him to know what the fuck is happening in crypto markets more than most other people.
I mean, it was fucked up twice. Once by Luna, and the other time by, I think, Genesis going down, and he still managed to stay a whale. So he's doing well.
Genesis one is probably going to resolve eventually.
No, I mean, he's going to be fine.
Yeah. I think
really?
Yeah, he
after the ETF, probably the parent company is going to have enough money to pay Genesis and close their debts. I think early next year, I think that's going to be fine.
Yeah, but also the crypto market recovered so much that every company basically is going to be able to pay back at least $1 value at the time of filing everything to the creditors. I mean, but that's the trick. Even Celsius is coming out of the bankruptcy because they filed, I think, when Bitcoin was valued around 19,000, something like that. So that's what they have to give back. I mean, they're not paying back creditors in kind. They're paying back dollar values at the time of filing, which was at the bottom of the bear market. So everyone is coming out of the bankruptcy. FTX, Celsius.
Okay, for rates. Okay, so anybody has anything to add about rates? Because I have something to add about liquidity. Nobody else.
We didn't even discuss rates.
So we know the pricing. Anything interesting to add about rates? Like there's market pricing. Way too optimistic. Like we have like a high probability of cuts in March. I don't think that's gonna happen. But we shall see.
Well, it depends. It depends. America, no. Europe, yes.
Right now we are inclined the other direction. We have America, yes, Europe, no.
I know, but that's why there is a really, really good trade there. But that's
next week, if US data comes hot, Euro-dollar shorts are probably going to be great.
110, 111 is just great to short it. Just
like a cluster of peaks around this area.
John, but you have been saying to me that since 1.01, I guess. Mm-hmm. So, I mean, you're killing me here. I'm waiting my dollars are crying,
Okay.
Yeah. I'm long US dollar. I mean, by the way, you all know that, at least for a considerable amount of my cash. So, it's been tough.
What's the rate differential right now? It's close to 1% at least. It should be.
Yeah.
America, US has 5.25%, if I'm not wrong.
US has 5.33 effective rate. US effective rate is 5.33.
Effective rate. Europe Europe ECB nominal rate is at 4%, I think. If I'm not wrong. Let me check.
Okay, so it's much less. It's like a third.
There's a positive 1% differential.
That's more. It's more than 1% right now. That's for sure. And that spread is going to widen in 2024. I'm pretty sure about that. I can, by no means, I can see the ECB holding better than the Fed, holding higher. Just can't see it. That's not going to be. That's not going to be the case in 2024.
I like betting on divergence for Canada as well. I think the immigration rates, crazy immigration rates, have held
way
up.
Too high.
Yeah, have held up their economy.
Yeah.
Like, that really does bring in demand, you know, and with housing and everything, a lot of extra demand. So I think once that goes away, Canada is in for a lot of pain.
There was a strange cut bid in the last couple of weeks, and I have no idea why. It was crazy. Dollar cut is down quite a bit in the last couple of weeks, and I have no idea why.
I know why. So what happening? I'm watching the overnight rates pricing for Canada and US.
Yeah.
We have gone in favor of more cuts in US again than Canada.
Yeah, that of course. The dollar fell across the board. That of course, but the cuts had a bit as well across the board in the last couple of weeks.
No,
and that
what I
makes no
mean
sense
is,
to me.
what I mean is, during the last couple of weeks, they both had a level of cuts priced in, right?
Yeah.
But they changed more in favor of U.S. cuts. There was like an extra U.S. cut for the next year priced in compared to Canada.
Yeah. I'm not talking about the dollar cut though. I'm just talking about the cut, you know, across the board, all across this. Yeah. But anyway, if we go by diversions, I really like the Australian dollar, Canadian dollar longs, just because of diversions between the RBA.
I agree.
Yeah.
Canada,
way too high inflation in Australia. They're still going to have to be hawkish going into 2024. They have to keep the rates quite high. Canada is likely, or BOC is likely going to be one of the first ones to cut down.
They should be.
Economy is not doing too good.
If they didn't have their current levels of immigration, they would have been in a lot worse shape right now.
Of course.
GDP they added close to a 10%. No, not 10%. 400,000 people.
There should be 1%, right?
Yeah, like 1%. More than 1% population in immigration.
Yeah, it's worse than in Europe, and that's quite hard to achieve. That's incredible.
Still advanced economy. Over 2021, Georgia added close to 10% in population and immigration.
Jesus Christ.
That's why GDP grew like 40%.
But I don't think it's bad if you're getting like skilled immigrants. I mean, as opposed to Europe, which is kind of, you know, not doing that.
Yeah, but it's the same in Canada, right? Like Kelvin can tell us about it. He's from Canada, and
okay.
I think immigration in Canada is not too good. It's not always skilled workers.
Kelvin, tell us about immigration to Canada.
I mean, I kind of, you know, read about it because I was interested to going to work there. I mean, they have a kind of a point-based system, which is crazy to get into. I mean, you got to get a degree. You got to get like a French language certification. Many certificates. I mean, it's not that easy to get into it.
Yeah, not really these days, no.
I think.
Sorry,
I mean, it was easier in the past. That's what I read about it, but not now.
Mm-hmm.
So.
Yeah, for sure, he is right.
That's
like,
why I think
much easier in the past.
I'm not debating the merit of the process itself, but it is disproportionately high compared to what it used to be.
Mm-hmm.
Yeah, they're doing everything they can to get people. I mean, what else would you do? I think every major developed economy, I mean, as an aging population, no, and especially Canada, which is kind of a huge country with a very small population, kind of everyone is living close to the U.S. border.
Mm-hmm.
They need to do that. They have no other choice.
Yeah, man.
Yeah, I think that is leading to some significant political pushback at the moment, I know.
Probably that's always the case. I mean, it's never like it's a trade-off, right?
Yeah, I mean, but politics is going to translate to an action in markets. So we might get like a cut to immigration.
You think so? Oh, so you
I
want to
mean,
bet?
Trudeau.
You kind of okay, okay.
Oh, okay. The Trudeau is not up for an election next year. No, they did election how long ago?
Kelvin, you know about that, right? You can tell
Um,
us.
let me check.
When is
Yeah.
the next scheduled parliamentary
No,
election?
it should be 2025, if I'm not mistaken. Going off the top of my head, but I'm gonna check. Yeah, it's 2025.
Yeah,
Yeah, 2025
2025.
October. Yeah, so okay, that's not relevant for next year. So yeah,
Mm-hmm.
things are gonna be fine.
There's enough time to bet against Canada
Mm-hmm.
until the election.
Okay,
So I
so
mean, your bet was I'm gonna bet against. I mean, a government cutting immigration and so it's gonna fuck up the economy, right? That goes to you.
then the
Um,
current rate pricing makes sense. If that's not gonna happen, if the immigration is gonna sustain things in Canada, then the current rate pricing can pan out.
and I think
Okay.
that would also depend
Higher
on
rates.
if Trudeau can stay in office, right?
Yeah. Yeah, I mean, it doesn't, like, government change doesn't, at least leadership change doesn't happen only with elections.
Yeah,
Yeah,
yeah. But Trudeau,
inter-party something can change it.
has always been someone who kind of heavily relied on immigration and immigration policy to kind of help him, win popularity. So you can kind of see how he reacted with the whole India situation, where it's kind of like it makes us seem kind of desperate in a way.
But the actual question, my opinion, is does that anyway affect the whole market in Canada? I mean, um, you already have the big fucking immigration in Canada, same as in Europe.
Mm-hmm.
All those immigrants, don't get me wrong, of course they work and of course they make their part to the GDP. But a big part of those don't really add value to the GDP, but eats quite a bit of social welfare, same as in Europe. So you sort of have this, how should I say, this sort of drag on the economy just because you have a lot more people in the country now, sort of, using more resources than they produce.
Mm-hmm.
So you have sort of GP going
I
down.
mean, but
Per
the
capita.
data doesn't look at that though. Data doesn't look at per capita GDP. Data just looks at aggregate data, and they will
Well,
hold up the aggregate data.
Nominal GDP, of course, is going to go up. Inflation adjusted GDP is going to go up as well, of course, but you're going to have some problematic numbers as well. Let's take unemployment, that is probably going to go up.
It's got a good news though. That's what central bank wants.
Jesus fucking Christ, no.
I mean, low wage growth, rising GDP, central bank is gonna cheer that.
Yeah, of course. I mean, of course, but that's not going to be too good for growth in the future, So,
Yeah, but are those problems gonna come home to roost next year? I don't think so. It's a bit too far.
I'm not sure. I mean, the immigrant problem, and I would really say it's a problem already. You have that for quite some time already in Canada and also in Europe. I would say that we are going to the point where it is becoming a problem.
But John, I don't think they're getting the same immigration we are in Europe. I mean, here,
Yeah,
I mean, most people come from Africa and everything, and they, as you said, they rely on mostly on welfare, on social welfare. But and the U.S. as well. I mean, they have a crisis right now with the open borders and everything. But I don't think that's the case for Canada. I think they get mostly skilled immigrants, which they add a lot of value.
I'm
I
not
think.
sure about that.
I would
I
say
saw.
before, maybe pre the whole Syria crisis, I would say so, but not anymore. Not anymore. Now it's
Okay,
mostly
so you
just
got
refugees.
lots of refugees. Okay,
Yeah.
okay, yeah, that makes sense.
Yeah.
Yeah, it makes sense.
So you're getting a
And
lot of refugees. How about Ukrainians? Are you getting a
Yeah.
lot of them?
Yeah, oh, yeah, a lot of them too. A lot of them too,
Yeah, but
yeah.
everyone
and
is. I think.
and you just gotta add that in Canada, as far as I know, the welfare part for refugees and immigrants is even worse than in Europe. So they get paid
Uh,
everything without doing
uh,
anything.
Yeah.
Only for 1 year, though, no? Because Adam was saying recently that
No.
some Ukrainian refugees were going back to Ukraine because they couldn't afford housing after 1 year. I think that's what Adam wrote. I think that we asked him, don't
But
they get like
you
housing
know,
support? He said only for 1 year.
that could be kind of opinionated because there's so many. If you literally go on the government Canada website, so many government programs that we offer that. I mean, if you're still struggling, I think it's kind of on you in a way. You know what I mean? Like,
I mean, all you have to do is cut off housing support in Canada, and they will not be able to live there.
yeah, but I mean, there was also
Housing alone will crush them.
yeah, but we also have government housing also, and on top of that, they give them like monthly checks for living expenses and stuff like that. So, like I said, it's really just kind of opinionated.
Okay, rates Europe, US, Canada. China hopefully will cut sizably next year because they have growth problem. They have the opposite of inflation problem. They
Mm.
have like what negative inflation for a couple of times now. Like
Yeah.
Captain Jack is always saying we don't see negative inflation. China is seeing negative inflation.
Mm.
PBOC is still middling. They don't want to cut. Their inflation target is 2% or 3%. China might have larger target.
I think it's not 2%. I think it's higher, yeah. But I'm not
Yeah.
sure where it is
Should
actually.
be 3%.
I think
3%.
so.
Yes, 3%. China's inflation target is 3%.
But
Not even
they're
2%.
still doing those baby steps of 10 basis point cuts, and they should just load the gun, do 25 at a time.
Oh, that is going to lead to a massive rally in China if they do that. That's going to change the sentiment, and you can bet the house and the farm on China if that happens. Buy
I hope so.
KWEB. Okay. Liquidity environment. This is the most exciting thing that I have on my calendar for early next year. We have reverse repo facility that's running down. Exciting things. I used to be very, not certain, but highly inclined to think that end of reverse repo facility was going to herald major changes. Now I am convinced there's another at least more than $1 trillion liquidity in excess liquidity outside of reverse repo facility. So in the last press conference when Powell was asked about QT, he said that right now QT is draining the reverse repo facility and we want it to get to low. And then after it drains, QT is going to start draining excess reserves in the banking system.
Yeah, of course.
And we want excess reserves to get to the level that is, they have this fancy term that they like using, just above ample, something like that. So they want to get to the ample reserves from, like, what's the too much, basically. There's some excess reserves. So if you look at the banking reserves in total, the pre-pandemic level was close to 2.5 trillion. But Fed was doing QE at the time because they thought it too little. So the last QT cycle was from 4 trillion, it got to like 2 trillion, and everybody panicked and they did more QE, got to 2.5 trillion. So even if you assume that the appropriate level of reserves is 3 trillion with a good wiggle room for excess, we have more than 4 trillion right now. And this is at plus 15 basis points to the lower bound of the Fed funds rate. Between plus 5 and plus 15, there might be even more excess liquidity. At plus 15, there is at least 1 trillion in excess reserves. So I don't think Fed, if the economy doesn't force their hand, I don't think Fed is going to stop QT when the reverse repo drains, which is, do we have that number for this week? Because
Yeah,
Livescope
I'm just trying to look it up.
Livescope was on vacation, so that's where I used to look it up.
Let me see. I was just trying to look it up. 1 trillion.
Today?
It's up at 1 trillion again. Reverse repo is up at 1 trillion today.
That makes sense. I mean, it's a year-end thing. It always happens.
Yeah, it's a year. Yesterday it was 830 billion.
Yeah, these numbers mean nothing. We're going to know the real number early January.
Well, the low was in December 15 at 680 billion. That's a bit more interesting because that's...
Okay, 1.018 trillion overnight.
Yeah.
Everybody's dressing up their balance sheet. So you see, there is some excess liquidity. I think Fed can do QT for at least till third quarter of this year.
I can tell you how long they're going to do QT on the exact day. I can tell you.
Okay.
It's going to be the day when something is breaking. That is going to be the day when they're going to end QT and not a day earlier.
Yeah, that's fair, but it can be a day earlier if things go smoothly.
No, won't be. They're just going to do QT for as long as possible because their goal is to run down their balance sheet, right? So they're going to do QT for as long as possible, and that is probably until something is breaking, until liquidity is just too low and something is breaking again. And then it can be that they're going to cut rates and still keep QT up. Why not, right?
Oh yeah, sure.
To run the balance sheet down.
That can easily happen.
So I think, yeah, that's going to be the thing. Something is going to break, and then they're going to end QT.
Well, I have it tentatively scheduled for ending in Q3 for next year. I used to think Q1, now I think Q3, because there's at least another excess trillion in reserves that can be gained.
Could be. At that point, I thought, to be honest, that the end of the reverse repo is gonna trigger things. It's gonna trigger.
Now I don't think so, because there's more cushion. I think there's more cushion in excess liquidity.
I don't think so either. I think the trigger is gonna come either by data, or simply with the first cuts, actually, because that is.
Depends on why the cut is happening.
Well, it's gonna happen because of that data. It's not gonna happen earlier.
Why the cut is happening? If it's happening due to good inflation and solid growth.
No.
I think stocks will still keep doing well. I don't believe
it's gonna. Well, cuts are gonna come because inflation is gonna go down, right?
Yeah.
That is gonna be the sole thing. It's not gonna be because unemployment is gonna go up, because inflation is gonna go down earlier than unemployment is going up, right? So it's gotta be inflation going down. And
but what if everything else is very solid?
Yeah. Everything else is very solid. The Fed is gonna cut down because inflation is going down. And you would assume stock market is going to rally at that point because that's a perfect setup for a stock market rally, right?
It's total Goldilocks.
But I think at that point the stock market and everybody else is going to realize, oh shit, we just hit the top and not the bottom, right?
I don't buy that. I don't believe that.
The
stock market is not going to be that forward-lookingly pessimistic. I don't think so.
Stock market, no. But the bond market and the bond market is going to drag everything down, in my opinion, at that point. I may be wrong. And I too think it's not the first cut, actually, but probably just the second cut, or the
But
third.
all of that is
Who
a bit
knows?
distance away. We will have more visibility.
Yeah,
There's too much
of
speculation
course,
until then.
of course.
But
But I think data at that point is going to go down as well, like growth data, ISM, whatnot. It's all going to go down at that point because you just can't sustain that with inflation also going down. As soon as inflation is going down, all of those forward-looking indicators like ISM, PMI, they're all going to go down as well. That's just growth.
I
right?
hope so. I hope
Of
so,
course.
but I am
Of course they're
prepared to
gonna
be
do
punched
that.
in the face. I'm prepared to
Yeah.
be punched in the face. Because I've been burned a sufficient number of times by US data. Anyway, like a gist or whatever how you pronounce that word. But what I want to say is, before I used to be rather convinced that end of the reverse repo facility was going to herald some significant action. Now I've changed my mind because there's more cushion, at least another trillion in cushion in excess liquidity elsewhere that is not showing up in reverse repo because reverse repo is yielding plus 5 basis points. There's a plus 15 basis points for excess reserves. So I think there's another trillion to drain there. And okay, so we are in rates, liquidity, and bonds section. So the next big question is, does Yellen start leaning on the long end again for issuance? If that happens, I think everything's gonna get punched in the face again.
Yeah, that's a good question. That's sort of $1 billion question.
We will know it at the end of January. November, December, the last quarter in January, and we will get another quarterly refunding announcement at the end of January. And I did not give it enough weight last time when they increased their issuance plans into the long end and at the end of June or whatever. Yes.
Yeah, it was middle of the year.
Yeah, it was somewhere there. Like they announced their plans and I didn't pay enough attention, and that hurt everything a lot.
Bonds been going down quite a bit. Question is what was the market reacting to the redistribution on the curve, or was it just reacting to the overall big issuance? You know what I mean?
Yeah, both. I think both. Because the last time, what led to positive reaction was overall smaller issuance and redistribution towards the front. Because before November 1st, when everything started rallying, like we were talking about it at the time, but the refunding announcement is coming. People are expecting rallies after this announcement. They announced smaller issuance size and they leaned heavily onto the front. They didn't increase 20-year at all. They increased 30-year by 1 billion, and they increased 10-year a little bit, and they increased the front a lot more because front is very solid,
Yeah, but
anchored.
Overall issuance was lower than expected.
Yes.
That is probably the thing why the bond market took it quite good. And also, the whole outlook as well, like Fed sort of pivoting, is a big thing, right? It's not always
happened. That also happened around at the same time. That's right.
Yeah. So I don't think you can pin it down to the issuance thing right now, how the market reacted how the bond market reacted to it. I think it's more down to the data, to the outlook, to the short-term outlook.
Yeah, but okay, outlook didn't change when issuance hurt everything, though. We didn't change
it did.
Outlook
We had that
in summer.
It did. We had, if we look at the data, unemployment data, we had the rally in unemployment in the jobless claims, in the weekly claims. We had it until late spring, early summer.
To
and then it went down again.
20% drop in bonds, though? No, dude. I was looking at forward pricing. There was no significant change in forward pricing. Forward pricing remains about the same.
No.
We had a 20% drop in bonds.
Long-term inflation expectations have been up quite a bit in the summer, and that is what the bond market hurt because, unemployment going down suddenly again for whatever reason, and everybody thought we're gonna hit.
Expectations rose 40 basis points. The rates rose 100 basis points. 100. Okay, rates rose 150 basis points.
Term premium.
The fuckers like Ackman were like saying,
no, term premium. That is all I say. It was not priced in properly before, and just this summer we hit long-term premium on the longer end actually. You know what I mean? That was the big repricing during the summer.
We got to 2.5% term premium on 30-year.
Yeah, makes sense, right? I think it was all just down to the data, long-term inflation expectations going up from
it goes down to issuance.
0 to something. And
I think it was all about issuance.
But we're never going to know, right?
No, we're not going to know, but I think it was about issuance. That's why I'm watching the next refunding announcement as well. If Yellen leaves on the long ends again, that's going to be dangerous. We can't swallow current issuance. We have like one good auction, one bad auction, and we're not having like a solid string of good auctions. We're having like one disaster, one good, one disaster, one good. At least the 6 basis point disaster 30-year auction was due to China, because the next one actually did stop through. I was very worried about that.
Just look at yesterday's 7-year 2.5%. Okay. 2.5 basis points.
So here's a question for European bonds. Does ECB ever start QT on PEPP? Or does it become the permanent part of their balance sheet? Because right now the plans are to start reduction in reinvestment in what?
No, they stopped the reinvesting of the PEPP.
They didn't stop. They tapered it, and they're going to stop in September or something like that.
At least they announced that they stopped. Something like that.
They're reducing their reinvestment rate, but they're stopping at whatever that was. And that means that over the course of the next 2-3 years, all of that is supposed to run off ECB balance sheet. So ECB is telling us they're going to be doing trillions of QT over the next couple of years. Does that ever happen? Does that even start? I don't believe it. I don't believe it.
I think they simply can't. Right? They cannot do it, because if you really start QT in Europe, some countries are going to go bankrupt. They just have to default at that point. Now, it's not going to happen.
You don't have to say which one. You don't have to say which one it is. By the way, we know.
Some countries.
We don't do that. Some countries.
I like that just mentioning Europe here causes kind of hysterical laughs everywhere. Dom starts smiling. I mean, everyone laughs. It's so funny. I mean, we are a laughing stock. I mean, we really are.
Somebody is still buying Europe though, like it's so great, like real value proposition.
I mean, to be fair, there was kind of a period of time, and in the early 2000s, I guess, when Europe actually did better than the United States. I mean, those times.
Yeah.
Actually, I mean that actually happened. But I don't think it's the case anymore. It happened, but it's not the case. It's never going to be the case anymore. I mean, if you look at the data, there's no. I don't have a data point to think that something like that is possible again. It's just.
I think we have to be a bit better. If we look back to the start of 2023, everybody thought Europe is gonna just blowing up, but if we look at the data, there are some countries that are holding up quite good. Like, let's look at Spain. Spain is holding up quite good. Inflation got down from 10%, 12% to, let's say, 5%. Still horrible, still insane. But it's sort of, it got manageable.
Its own great.
Yeah, but it got manageable, right? So if you want to make the case for Europe, you gotta say everything got better, right? Sort of, in terms of data. We all know it's not in the daily life, but in terms of data, everything got better in 2023, right? And if that continues in 2024.
But for example, in Spain, government has decreased the taxes on a lot of goods in order to get inflation down. They are not going to be able to do it this year. They are actually increasing them right now.
Yeah, it's the same. It's the same all over Europe. It's in Germany.
Did they cut VAT or something?
Just the same. VAT, yeah. But still,
it's gonna be like a one-off
thing. 5%. That's something, right? It's a win. You gotta check for something.
But are you claiming things got better because, like, I mean, the average inflation rate in the European Union, I think it's around 3.5%.
What's the annualized inflation over the last 3 months? That's what I want to know. I don't care about year-on-year inflation.
Yeah.
I hate that everybody is reporting year-on-year inflation. I hate it with great passion. Like, nobody cares about year-on-year inflation. Give me annualized 3 month inflation. I don't care about what happened 12 months ago.
I think it should be even lower, Talion. It's actually even lower than that. It's less than 2%.
Yeah. Last couple of months we had really good readings of inflation.
No.
I mean, the question is, did it get better because inflation got lower? I don't think so. I mean, if you wanna, I don't know.
I mean, okay.
You have to say inflation got lower because things got worse, right? That's actually the problem.
Yeah.
But you don't. Yeah, but you don't see that in the data because you just look at inflation data that got better. That got from insane 12% to let's say 3% or whatever, and you look at the GDP, that is somewhat zero, right? Just flat. And overall, it just got better from 2022 to 2023 on the data. Unemployment is somewhat steady, or just a bit rising. It's not rocketing. So Europe is sort of steady in terms of data, but it got better with the problem. So the inflation problem is going away slowly. So you could make a case there for Europe getting better. But of course, we all know it's just getting better on the data, but it's getting worse in the background, right?
I mean, you had like the spike in demand from the end of COVID, right? I mean that was everywhere. It was the main reason of inflation, and then you had the war and the energy prices going up. And I think Europe is gonna still have for a kind of a decade the energy price issue.
Yeah.
It's gonna have higher energy prices than the rest of the world. So
it should be a new trend.
That's gonna be kind of. I mean, it's a dead end.
It's gonna affect members differently, right? Like Germany is hurting more than everybody, it seems.
Yeah, Germany's fucked. I mean, they don't have Nord Stream anymore. They used to get
everything started over Nord Stream 2. Everything started over Nord Stream 2.
Those fuckers shut it down all the nuclear reactors.
Yeah, I don't, and even Spain. I mean, Spain, I think is in the process of shutting down the last 5 reactors, which I think they were kind of producing 10% of the whole energy for the country. I mean, we have Italy.
What's the deal with nuclear in Europe? Like, why?
I mean, there's kind of across Europe. There's kind of an anti-science political groups, the Greens especially.
Like they didn't even get nuked like the Japanese.
Yeah.
No.
I mean, it seems like everything got a lot worse after 2011, the Fukushima plant disaster in Japan.
Mm-hmm.
Yeah, it was a psychological thing, I mean, many countries were in the process of kind of ramping up their nuclear, especially with the promise of a cleaner kind of energy going forward, cleaner nuclear energy. But then that happened. And everything was, I mean, if you talk Italy, we had like, after Chernobyl, I mean, there's always kind of these kind of events in the course of history that kind of, affect everything going forward. So in Italy, we had a huge referendum after 1986, after Chernobyl. and obviously everyone voted against nuclear. So they made it central, close to us.
Yeah.
It's not going to make a
You are,
difference if it happens in
you
our
are taking the
territory.
risk without the benefits, basically.
Yeah, and we're buying their energy, so it doesn't make sense. But then Fukushima happened, and obviously again there was kind of a psychological thing. Everyone was scared again, so we voted against another time. So we're going to wait another 25 years without nuclear. And at this point, it's kind of, it's not going to happen. But but then again, it's kind of similar in the whole of Europe, even France. I mean, France is kind of dodged the bullet with the war because they had a lot of nuclear energy. But I think they shutting it down a little bit. Even then, Spain is shutting down.
That's why
Germany is
Georgia.
shutting down.
They're so well positioned geographically. They
Yeah.
have a lot of rivers. They produce more than 80% of their energy from hydro electricity, and they're planning to start exporting it. Energy is so cheap here. Like, they're very well positioned for that. Like, energy is really cheap. Like, my monthly bills, when I'm like not thinking about anything, heating everything all the time, using whatever all the time, and I end up paying like $40, something like that, for all of my utilities: natural gas, electricity, water, trash, whatever.
But you know that you're talking to Europeans here, right? We don't want to hear that. We don't. Just stop it. We don't want to hear
that. Yeah, I mean, every time you're kind of, bragging about all of your advantages, like
zero capital gains tax.
Yeah.
How about that? That's gonna hurt really badly more than anything.
I go to the beach every day because it helps my trading, and then I don't pay taxes, and then my energy is super low, and then I take the taxi. 400-kilometer taxi is going to cost me €2. And,
yeah. So really easy. Let's move everyone to Georgia. That's easy.
I'm fucking thinking about it. I am.
You should do it. You still don't have family.
Next year,
leave the sinking ship that is Italy as soon as possible, man. I can tell you.
Dude, what happened with that? You were planning some things to move. Anything on that front?
Who?
Captain.
I mean, yeah, I am actually moving.
You're moving.
It's happening.
Okay.
Yeah.
It's happening. So yeah, it is happening. So we're our resident Italian. Oh, okay. Allessandro is also in Italy. Not just Capt.
Yeah, I mean,
but not planning to moving so far.
All your properties there, right?
Only the rich. Only
I
the
cannot
rich stay
move
in
my
Italy.
properties.
Yeah, only the rich stay in Italy. I mean, yeah.
Until it's seen,
but
though.
I have to say, privately, he always talks to me about moving because, double-edged sword. I mean, he would like to go to Dubai and bring his real estate with himself. I always have to tell him he can't fit into a plane. So, yeah.
That's great. Yeah, but
by the way,
basically we're talking about energy, basically. So Germany seems to have really, really shot itself in the foot with I don't want to say they did it themselves because they didn't really cause the war, but as a result of the war, it seems that they have become the sinking ship now, not just Italy.
Yeah, no, but everyone. I mean, seriously. I thought that they would have changed. Everyone would have changed their stance on nuclear, and realized, okay, we lost our main energy trading partner. We used to get most of our gas from Russia. All of our industries kind of run on gas. Okay, what are we going to do? We're going to ramp up nuclear, right? And we have a process that at the same time, you're paying more for gas and you're shutting down nuclear. And everyone is. I don't see a European country which is kind of not doing that right now. I don't know why.
Germany is also, on top of all of that, insisting on their debt brake, and they're not subsidizing enough of their industry.
Yeah. It's true. It's true as well.
They're clinging to their all constitutional mandate, and they're basically the industry is getting squeezed, and the government could. I mean, at least Germany has room to support it. They have room to subsidize and hope for a miracle.
Yeah, of course they have.
But they're not doing that either.
You know what they're actually doing? They hope for a miracle, but trying to sustain their budget. So that's what they are trying. And then hoping for a miracle from everybody else around it. Sorry?
Everybody else? So the miracle, oh, okay. That's going to be a tough one.
It's not going to happen. Of course not. But
okay, so this is a good point, good time to segue into war. So bonds, yields, everything we talked about. So what are people expecting for a Ukraine war? Because that's going to matter for everything else. Okay, so
I think it's going to go for the whole of 2024. It's going to be a.
So do you guys think that the budget, the U.S. budget and European aid are going to pass? Because if that doesn't happen, things might end much faster. Like 61 billion held up in U.S. due to the border negotiations. 50 billion euro was vetoed in European Council by Orban.
Oh yeah, the Orban always does that, but in the end, what it does is kind of I don't know how to say in English when you have the possibility not to vote. You kind of leave the room and then everyone votes.
Yeah, I mean that's what they did to pass the enlargement package.
Yeah.
Remember? So there were two main issues. One was the enlargement package, because I was watching that very closely because Georgia was in there. Enlargement package. And the second one was the aid. Orban vetoed 50 billion in aid and left the room to pass the enlargement package.
Yeah, exactly. That's what he did. Oh, I thought he left the room for both of them. Okay.
No. Just money didn't pass. Money didn't pass.
Oh,
money got vetoed.
Okay.
Ukraine got a nod from the EU Council to start accession negotiations.
Yeah, but in the end, he's kind of a strong arm in other European countries into some concessions, right? Because
other European countries were like holding up his next generation EU fund money, right?
Yeah, that's what he wants. I mean, that's what he wants, and they're gonna find a compromise. They always do because we have to send money to Ukraine. In the end, that's what's going to happen for the whole of 2024.
So you think the money is going to come eventually?
Yes.
And in this 50 billion quantity?
Yeah. Yes.
It's not going to be like a stranglehold tiny budget.
No, but you have to understand, the whole package Ukraine gets, most of it isn't for military purposes.
Yeah, it's for everything. Like everything is on subsidy from West.
I mean, it's barely enough to keep a stalemate on the battlefield, and that's pretty much it. And that's what it's going to happen. I think
aid is going towards their entire budget, like the pensions and living expenses and everything, not just the military. But so right now, a couple of days ago, their finance minister or economy minister or something was like urgently asking for aid money from sponsors because they were saying our budget is in dire need. And this is subject to, passage in the democratic institutions. In the U.S., it has to pass Congress, and it's held up due to the border negotiations. And in Europe, I don't know how the process happens in Europe, but it's also held up. So,
but that's the question about the 300 billion Russian assets stock in the U.S. and other European countries. I mean,
they were saying that they want to use profits from those assets.
Okay, not the whole thing.
Not the whole thing. They were saying we want to use whole thing for reconstruction of Ukraine after the war. We want to give the profits from those assets right now.
Mm-hmm. But that is kind of an interesting question. Do you think they're gonna have the guts? I mean, to kind of
use the reserves.
Use the reserves. I mean, other countries are gonna take notes.
I think they can take the profits. That's a much easier question. I think, like I think they can take the profits, and I think they will take the profits, but I don't believe they will have the guts to take the reserves themselves.
Okay. Because that would be a first. I mean,
yeah.
Other countries would take no.
They were saying that we will use the reserves for reconstruction after the war. You know, at that point, probably the political situation is going to be more favorable towards Russia, and the reserves can get, like, that question can get removed from the table. So it's a tough talk for now that can and will probably not materialize. But they can take the interest that those reserves are yielding and do that. And Russia probably is not going to make too much of a fuss about it. Because at the end of the day, 300 billion, at what 5%, that's going to be 15 billion per year. That's not too much money. People are already spending way more on other things.
Yeah, also the assets that Russia freeze. I mean, not freeze. They kind of took it. I mean,
they confiscated a lot of assets from.
They confiscated a lot of factories and reconverted them, and also even in the aviation industry, many planes. I mean, they think they even took more than that in the end. They're not going to matter. It's not going to matter much. I think so. I think so. I mean, yeah, I think so. Yeah. Because you have all of the
eventually, basically, the first question right now is: are the funds are going to arrive in a timely manner? So
until Biden is in power, yes. Until elections, yes, they have to. One way or another. I don't know if through Europe or through the United States.
I don't think the U.S. is going to easily pass 61 billion. That's what Biden was asking. I think they can do maybe 25 billion. I don't think 61 is going to pass that easily.
The problem is it's election year in America, and you have a lot of Americans going already anti-war.
Yeah.
That's why I think
it's not a popular thing to spend money on.
Yeah.
It's all tied to budget negotiations. You know, it's all tied to budget negotiations in January or something like that. So.
But they don't have a choice. I mean, the United States don't have a choice in this. I mean, if they don't pay for that, to the world it means like caving to Putin or to anyone who invades another country, basically. So they have to. I mean, I don't know if it's going to come through the United States or through Europe or whatever.
I agree, it has to happen. But, you know, sometimes politics leads to stupid outcomes because inter-party politics in the U.S.
I mean, it will be a huge shock to me if it doesn't happen.
I agree. I just think it can. I don't think it will happen fast, but I think it will happen. They will squeeze the Ukrainians until they start like making a lot more noise. Maybe in February or January, it probably can pass.
No, but if you think about the war, I mean, we're talking about the budget here. If you think about the war, this is kind of it. I mean, you have front lines, they're going to move a few kilometers back and forth. But this is it, right? This is going to be the end of it.
Especially this period, right?
Yeah, I mean, the winter
I think
is always...
they might attempt something else again next spring. If that doesn't work, probably then this is going to be it.
But it already proved it can happen. There's no way. Even if you throw all the money in the world at them, they don't have enough time, you know, to train the troops for the new equipment and everything. I mean, war is fucking complicated.
Yeah, I personally don't understand warfare, not at all. So I cannot comment on it with any sort of.
I mean, you know, there was this kind of hype around the counteroffensive, you know, in the past few months, in the summer until October. I mean, it was a mistake because nothing could have happened from that. And nothing should have happened. I mean, because the Ukrainians, they're doing miracles with what they have. They don't have enough. They already did a miracle, holding like that. Right now, this is a great result for Ukraine. They lost not much territory compared to what could have been. So in the end, I think, I don't know how, but somehow it's going to end after 2024. And this is going to be the end result. Yeah, after the election.
If Trump comes into power, that's going to be an easy end, likely.
I think it's going to happen regardless of the who's going to be president because Ukrainians are tired. Too many died, and at some point you understand that war is just pointless from the point of view of the people fighting it. So yeah, you just want to kind of move on because if you're dying to gain 10 kilometers, I mean, what's the point in that?
The question for us is, does it change anything in the market? I don't think it does change.
I don't think it does. It change. 2024 is going to be kind of neutral.
The outcome might matter for China.
Why? For Taiwan?
For Taiwan? For Taiwan, you mean?
Yes. Yes. Collective resolve of the West will matter for China, I think. If West just gives up, okay, this is fine. And if that cascade happens as fast as the US withdrawal and collapse happened in Afghanistan, China is like, oh, okay, this is mine now. All we have to do is endure like a year of a lot of noise and everything is going to be fine. So I think that's going to matter for China.
But that's not going to happen in 2024. That's
no,
just
it's not.
what I see. No.
That's long term.
I'm not talking about, okay, that's fair. Taiwan is not going to happen, but implications will be visible at that time. But the act itself might not happen, but what happens with Ukraine probably is going to matter for further out for Taiwan.
I think that's a thing, that's a matter of time, which is, you're going to have lots of weeks, maybe months to think about that when it's time. But I don't think it's time yet. No.
Yeah, it's not going to happen overnight in the markets.
No.
I mean, you're going to have time. I mean, we were talking about going long China before. And I think Allessandro, is going to buy like a couple millions of China ETF stock. So it's definitely going long after hearing you kind of.
I have a question for you, Talion.
Yeah.
I have a question for you. We were discussing, me and Captain, on private messages about the advice you gave us. I mean, for us, everybody in this chat, the advice about buying MSCI China.
Yeah.
For 10% of portfolio, and it's something I'm really considering about to do. But Captain warned me, and he said, "Okay, Talion has a bias. He's a trader. He has a different bias than you because
true.
Talion is a trader. You're a long-term investor." So you should act in a different way because if things go wrong, if things turn shit in China, then he's going to sell the ETF and forget about it. But what about you? Are you going to hold the ETF until 10 to 20 years, or are you going to sell it? That's the question, Captain
I'm not
Jack.
Going to hold it. Yeah, I'm not going to hold it.
Yeah, but what about me? Shall I hold the ETF, or should I sell the ETF? So in that case, you have to tell me.
If you're planning to hold long term, I think you should hold it.
Yeah, I'm planning to hold long term since I'm a long term investor.
I recommend not MCHI because you probably like growth stocks, right? You probably like tech more. And if you're gonna be investing, you probably should go for like a tech ETF, like KWEB instead of MCHI.
Okay. Thank you for the advice.
Yeah.
So
don't go too big. Don't go too big, but
10%, like you said. 10%. That's fine.
Yeah.
Perfect.
KWEB instead of MCHI. I recommend tech.
Okay, just
tech.
So.
Just really quick detour. I mean, a few seconds.
Yeah, sure.
You must have. I mean, you're a trader. You have a trader bias. And you're doing good. You're doing great. But you must have something. Something long term.
Long term.
Something you just buy and forget.
Land in Georgia.
Okay, land in Georgia. Okay, but if you had a gun pointed to your head, and they said you have to, I don't know, invest money into your pension fund and like a Roth IRA, something like that. You can't touch until you're 60. I don't know, 60.
I would buy China. I would buy China.
Would you buy China? Okay.
Yes, I would buy China. If I had like a one choice that I had to hold and I had to buy, I would buy China.
But you would buy United States and China, like on a
No, I would just buy China.
90%.
If 10%,
Oh, you just buy
if it's 10%,
just China?
I would just buy China. Yes, I would just buy China with
Okay.
10%.
Okay.
Because it could go to 0 or 100 and go whatever. If it goes to 0, I lose 10%. That's fair. I can do that.
So you wouldn't want to hold the S&P long term. That's what you're saying?
Not at this time. I want to hold it long term, but at these prices, no. At this time, at these prices, no.
Oh, I see.
But the things are going to be different next year. I'm expecting a downside, sizable downside in stocks for S&P. So at that point, I might also add another 10% of S&P in this hypothetical scenario. But right now, at these prices, no.
But we did have a nice entry around 3,600, I think, in the S&P, something like that. I don't have the chart in front of me, something like that. 3,700, 3,600,
Yeah.
something like
Yeah.
that. Did you consider buying at the time, or just what a whole different
I was
picture?
long at that time after the inflation data, but like you said, I also exited after some profits. I didn't hold it.
Okay, thank you for it.
Yeah, no problem. I mean, I really like China. As long as you believe, okay, so that's why I'm saying 10%. If China goes to complete shit, you're going to lose 10% of your stock portfolio. It's fair, which is fine. But it can go to all-time highs with the sentiment change. It's going to go 4x on KWEB. It's down like close to 75-80% from all-time highs.
What about this?
What's the name?
TQQQ. Just buy it. Buy and
Why
forget.
isn't it at all-time highs? Why?
No, it's actually not. That's why I said.
Why
What about this? Yeah, I have no idea. QQQ is all-time high. TQQQ is not. No idea. I don't know. That's why I thought you may know.
Do they matter that much? I mean, the only thing I can think of is funding costs.
I have no idea, but it should be at all-time high. But that's why I thought I'm asking you. I have no idea. No idea. But it's like a twofold until all-time highs, sort of. It's like down 50% still, sort of.
Weird.
Look at that, 77%.
Yeah, but it's not that many years for it to be dividends and funding costs and whatnot, you know. So I don't know.
It should not be funding costs. I have no idea why.
I mean, the funding costs can become like that over 10 years, but not over 2 years.
No, it's 2 years.
Yeah.
I don't know, but it's funny. I like it though. I like it going forward into 2024. If we dip down here to 16, something like that, I may want to buy again.
You want to buy QQQQ?
Of course, I want to buy with both hands.
Yeah, okay, we already actually did get into the next section was risk assets. Basically. Yeah. So we were talking China. Like I said to Jack, Captain, I would buy China to hold long term if I had to buy something and hold long term. Okay.
This is the true winner here in front of your eyes. This is the true winner in the next 50 years.
Just messing with me all the time.
It's all-time highs. It made all-time highs, and it's gonna do more all-time highs going to come.
I'm not going to give more money to the crowds, you know.
Okay. Any other stock markets you guys are buying? Any other stocks? Okay, Captain, I don't think you were here, but like I was saying, as an example for China, Alibaba is trading a 7x multiple of forward profits. Equivalent U.S. companies are trading close to 20. Multiples are super cheap in China. Super cheap. Okay, there's a company, EV maker, BYD, maybe you've heard of it, Build Your Dream. They surpassed Tesla. They surpassed Tesla this quarter in terms of their EV volume.
Yeah, production. Yeah, yeah.
They have similar profits, similar growth projections. Their market cap is close to 12x lower, 12 times lower than Tesla.
But when you're talking multiples, you're talking growth stocks or whatever.
No, I mean the equivalent stocks. Tesla versus BYD, same market, same profits, same growth. Multiple on BYD is 12 times lower than Tesla.
Right.
Yeah, this is not purely China discount. There is a little bit of a difference catering within the EV market discount, but still doesn't justify a 12x discount. And as I was saying, something like Alibaba trading at 7x or something of forward profits, whereas
Yeah, that's
something
crazy.
like Amazon is trading, what's the Amazon multiple? Amazon is probably much higher.
Okay, I wrote down thank you.
Yeah, that was my basic premise for why China is a good long-term buy. People just need to get over their fear of Xi Jinping and their current policies, and I think within the next 10 years, China is going to be like fantastic missed opportunity, like SPX after global financial crisis. I think China is right there right now. Okay,
Yeah,
any other markets that
yeah.
you're buying for stock markets?
No,
No.
not really.
Okay, let's get to everybody's favorite topic then in this group. Crypto.
Okay, let me start. I mean, I think I have
floor is yours.
Yeah, tips on this. I think let me count. In less than 48 hours, I'm kind of going to win a bet, if I'm not mistaken.
That is true. That is true.
So yeah, I don't wanna, I don't wanna jinx it. I'm gonna wait.
Count your chickens too early, yeah, but it's
Looks
likely
like
that you're gonna win.
So yeah.
Let me check the price. Let me check the price.
Just in case.
I wanna see it myself.
I mean, if you deploy all your capital now and short it, you'll probably be able to bring it, I mean, below 10,000 for a few seconds and maybe make a screenshot of that. Yeah.
You still have 48 hours.
You know what is crazy, Dom, that I checked? When we made the bet, Bitcoin was trading around 43,000.
Yeah, around the same price as it is now.
It's fucking crazy. It's just a complete turnaround. And we ended up right where we started.
I have to say I'm sort of proud of myself because I sort of predicted the dip. It just didn't dip too much, enough, right?
Not enough.
It was just not enough. But it was close.
Yeah.
It was very close. I got you sweating. I swear to God.
I did sweat.
See?
Not just for the bet. I mean, not for the $100 for sure.
Yeah.
I would
Your own portfolio.
Yeah.
Okay, so what's the verdict? Anybody who is not expecting sell the facts on ETF?
What's the question again?
Anybody who is not expecting a sell the fact on ETF?
No, I think we all do. I got sold on that. So yeah. Makes sense. I was tracking gold, and when the ETF came out in 2004, it did a kind of a 10% drop when the ETF came out.
Really? Oh.
Yeah, and then it recovered.
How long did that last?
It took 8 months to recover, and then it went
the timing is perfect then, because I do expect a durable rally to start towards the last quarter of next year.
Yeah, I don't know if it's going to pan out exactly the same because it was completely different beast. I mean, gold was huge, and it was just coming back, after the ban in the United States. But I think it could be similar, and then it managed to do a kind of a 4x in 6 years or so, something like that. Off the top of my head, I don't have the chart if you want to project it, but I think it's gonna sell the news after it comes out, and then
maybe to 30K, maybe.
yeah, I
in
mean,
fact, go on, Captain.
no. I mean, it makes sense. I mean, why wouldn't it happen? It has to, if you think about it. And then slowly, if you kind of take all the companies that are marketing the ETFs, if you take all the assets under management they have, if you count like 0.5, 1% investing into Bitcoin,
Yeah.
I think it makes sense. I think it makes sense that it goes to
I want to
all-time
buy.
highs.
I want to buy to hold second half after halvening. After we get a sell effect on halvening, and a couple of months, couple of weeks passes, and everybody's like forgets about Bitcoin. Sometime second half of next year, I think that's gonna be a good point to get
It
in.
depends if you want tailwinds. It's gonna be good for you on the second half of
Yeah, that's gonna be
2024.
all
Maybe,
tailwinds at that point.
I mean, if you want a kind of an asymmetric bet, maybe you pass the time. I think. I don't know. If you want to like little downside and a lot of upside, I think it's too late for that.
Oh yeah,
But if you want,
that was during the crisis and everybody was going bankrupt.
yeah, I mean, from I don't know, 17,000 to 25, 28 was good. Was a good window to buy.
Yeah.
But
all of this is theoretical for me. I don't have money for crypto next year. Yeah. Okay, outside of Bitcoin. Okay, so this is for where we needed Sebastian.
Yeah, we don't have
Dagan, I don't know how to pronounce his username, but Sebastian.
Yeah, it's Dutch, and we don't have all the brain power we need right now. All the degenerates for real, and not in this chat right now. Yeah. But I think he made up a pretty good list. If you can scroll the main group, I think it's not the off-topic group; it's the other one. It's the main one. If you can scroll.
I like Astro. That was one of the most talked about ones.
Yeah, what he talked about makes a lot of sense because you have Thor Chain makes a lot of sense for what they're doing.
Yes, I agree about that too.
And I mean, I always like to do things in thirds because I'm not able to manage. I mean, if I spread myself too thin, I'm not able to manage too many things. Watch them. But especially in crypto, you can't buy long term. I mean, you definitely want to watch all the crypto you own. So I think what I have right now is apart from Bitcoin and Ethereum, I have Solana, I have Matic, which is Polygon, and I have Thor, and I have Room, and that's it.
What's the difference between Avalanche and Polygon? Is there anything that's materially different?
No, they're exactly the same. The Ethereum layer 2s doing kind of the same
layer
thing.
Layer 2s on Ethereum, right? There's not.
Yeah, but it has better technology. Polygon.
On Polygon?
I mean, they're the cheapest. They're the cheapest one. Yeah, I mean.
Yeah, I like Nexa, but people are kind of not interested in buying centralized coins anymore.
I mean,
I wonder why.
I mean, but they did survive all of that shit. That's a point in their favor. Bulgaria raided their offices, and then dropped charges recently. That's another point in their favor.
I have to say, I thought they would go down. I was sure. I mean, I thought that was it. I mean, when you have the terrorism charge, I mean,
and they dropped all the charges. I think that's a big positive in their favor.
Yeah, it is. It is. But even if they survived all of this turmoil, and everyone forgets they went really close. They went really close to going bankrupt. When FTX went down, there was a small window when they managed to get a lot of money.
It was like 300 million, something like that. I wouldn't call that bankrupt, but it was 300 million at risk.
It was 300 million at risk. No, but it could have started kind of,
yes,
a very bad series of events.
I mean, they sold it as a big win, but it was a win at the time, but also highlighted the risk that nobody was aware of regarding Nexo.
I mean, I think the Nexo showed that they're good at risk management, but I don't think they're good at kind of growing the company. I mean, I don't know. When you buy a centralized token, it's not the same as buying a stock in the company.
Yes.
You don't get the same benefits. So I don't know if it makes sense today to still buy centralized tokens. I mean, I don't know what kind of upside you have.
We're earning Nexo program.
Yeah. That
will tie the Nexo value to their overall balance sheet. So I think it's a good proxy for the overall crypto market to own some of it.
It's a good entry point for retail. It's much easier than decentralized world.
That is fair,
for sure.
Yes.
Yeah.
Just but the problem with being centralized is all the regulators are chopping off their access everywhere. They can't be in US anymore. Like a lot of places are cutting off access, They have like banking problems one day. And if Europe does something nasty towards them, then everything might just,
I mean, Europe regulated them, and regulation is going to come in 2024. There's a lot of stuff they won't be able to do anymore, like offering interest on some stable coins. It's not going to be good. We don't know the specifics yet because the countries have to receive. So the stablecoin regulation is coming in June 2024. So
June.
From that point, stablecoin issuers like Tether or whatever, they have 12 months. They have 12 months to implement what they have to. I mean, to abide the law. This is for stablecoins.
And low-key suspecting that SEC is going to do something about stablecoins after the Bitcoin ETF. We shall see.
The SEC? I don't know.
Yeah.
But
you were saying?
Yeah. So if you count, the law is going to be kind of official for stablecoins June 2024, and then 12 months from that, all stablecoin issuers have to abide, and then you have 6 months later, kind of at the end of 2024, there's the law for Casps, which are like crypto exchanges, providers like Nexo. So there are many new regulations. They have to do a lot of stuff. There's just going to be the KYC for the wallets and all the stuff. It's kind of new, more regulation on top of it, and it's going to mean more costs for all the exchanges and everything. So maybe you're going to have kind of a steady thing in 2025, maybe the end of 2025. Everything is going to be in motion already, and you're going to see how these companies are going to do. Because Europe for Nexo is, I think, it's main market now, because they don't have access to the United States.
Yeah, so they're expanding to Asia.
They're expanding to Asia?
Mm-hmm. Yeah, they told me they're expanding to Asia. They're looking forward Southeast Asia.
If you think regulation, yeah, exactly. But Asia is China and India, basically.
Southeast Asia is not either of them.
They want to expand in United Arab Emirates. Dubai.
Anthony himself is there, no?
It's not a big market. I mean, when you go into Asia, you want India, China is out of the question because it's kind of a closed market, but you want India and Indonesia. I mean, these big countries with a lot of people, huge markets.
In the latest MIA, they also talked about expanding to South America, Brazil, Argentina, etc., because they said there is a huge market there. They see a lot of interest. I know those are not big markets, but
they are
better than anything. Better than anything.
No. It's big markets in terms of crypto adoption.
Yeah, in terms
Mm.
of crypto adoption and people, yes. Europe is not a big market in terms of number of people.
I mean,
South
Europe is
America,
500 million people market. It's a huge
I
market.
mean,
yeah,
Europe is very
it's a small
competitive, though.
market. There is capital, yes, but there are not many people.
I mean, depends how you define many people, because it's a half a
I
billion
mean,
people.
there are enough people in Europe. It's just very competitive
adoption
market.
is
There
not
are
too.
way too many fintech companies in Europe.
Yes. Yeah.
So like it's
But
hard to someone like Nexo to dominate this space, because there's a lot of competition. Like Revolut and stuff. Like it doesn't take much for them to start add crypto functionalities and snap.
yeah, Revolut are kind of eating all the market for them. I tried the app. It's really great, I have to admit. Obviously, it's not doing the same thing that a company like Nexo is, because Nexo's product is really good and it's kind of specific
Yeah.
on the lending side of things.
Yeah, product is amazing. I used it multiple times and it's stunning.
But I think a
They
company
should
like
just do
like
some stock
Nexo,
sales instead of talking tokens.
yeah. But by the way, I don't think Nexo. I mean, I'm not Dajin, so don't take my word for it. But I don't think Nexo is a good.
Nexo
I mean,
is what?
I'm not saying it's not going up. It's not going to go up. I'm saying that the better bets probably. I mean, for sure there.
But
If you wanna ape into something, it's not going to be Nexo, right?
Oh yeah, Nexo is more like Nexo is not an ape coin anymore. I don't think so. But you probably are betting for more conservative gains on that front.
Yeah.
Well,
But then if you're betting for conservative gains, you're going into Bitcoin, I think.
I think Nexo is going to be somewhere between Bitcoin and Astro. It's not a degen trade. It's not a fully conservative trade. It's in between. It's in between there.
But are you saying that because you don't have time to research other cryptos, or just like Nexo?
If I wanted to ape, I would not ape into Nexo, literally because I don't have time to research anyone else, and I know them, and I know they're good. So I know them. It's like a viable vehicle to have some exposure to the space. That's why I'm choosing them. I don't want Bitcoin or Ethereum because I find them too conservative.
Can you imagine something like
I don't want to be
like
conservative
Bitcoin?
when I'm buying crypto,
Yeah.
I mean, do you guys think Bitcoin and Ethereum are conservative? I mean, if you look at the volatility, compared to our traditional
in crypto
assets.
space, dude, they're very conservative.
Yeah, it's kind of Bitcoin is a stable coin in crypto. Yeah.
More or less. No, I believe Nexo has its place, and I believe I see retail jumping from Revolut to Nexo quite easily. Because the rates are quite higher.
Revolut doesn't serve a lot of markets as well. So if Nexo can regulatorily expand into the market that Revolut doesn't serve, they can do well. But maybe they have a great opportunity in Argentina right now if they can make something of this transition.
Yeah, really good one.
Yeah. I mean,
Argentinians are
a rather sizable country,
Excuse me?
I mean, Argentina is a rather sizable country. They have a big opportunity there.
Yeah, and people are jumping into crypto really fast. Yeah.
Yeah, mainly stable coins because they don't have access to real dollars.
Okay. We have been going for 2 hours and 20 minutes. Okay. Anything? I have one last topic I want to talk after this, and then we will open the floor for anything else. Okay. Anybody else have anything else to add on crypto front?
Yeah,
no. I'll take that as a no. Okay. The last topic that I want to discuss is AI. What do you guys think we have in store for AI for next year?
I bought Microsoft.
Dude,
how about that?
That Google thing was so disappointing. What was that called? Gemini?
Yeah.
Gemini.
Their demo video?
I thought it was fake.
Bamboozle. It was a bamboozle.
I mean,
but the original demo itself was so fucking impressive.
So that is there any other video? I saw the original one and it was quite good.
And that was fake.
Okay.
Not fake. I mean, it was
not
edited
fake.
to the point.
Yeah.
It was heavily edited to the point that you thought that was happening in real time, which it wasn't.
I mean, the difference in processing power between it happening in real time and being fed text prompts and still images is like 1,000 times difference.
Yeah.
Okay.
That's why I was very impressed with the original video, but anyway, so
yeah.
My take on AI is, I think AI is what cars were to horses. All of the technological advancements we've had so far have allowed people to migrate to different jobs, and all the technological advancements have led to productivity gains, but without the accompanying spike in unemployment. I think AI is going to be different. I think AI is going to be like cars to horses. We are going to become obsolete, and AI is going to wreck full employment worldwide. Maybe not next year, but long term. And I think labor market is never going to recover. So there's going to be a point where central banks will cut rates to zero, do max QE, and that's not going to work. That's why I think for next 10-year period, owning duration bonds with good yield is important.
I think this is going to be a long discussion.
I think so.
I think it's going to boil to regulation in the end, because many countries won't allow the loss of jobs that AI inevitably brings. So it's gonna, I don't know, the transition might last 2 years or even 30 years, 40 years.
Optimist in me thinks that we can actually transition to some sort of socialism, where all the production can be taken care of by someone who doesn't actually want to accumulate and hoard wealth.
Yeah, it could happen already. It could already happen. It's not going to be, I think. It's not. But are we talking about what side of things? The stock or making money on it? I mean, about AI, or are we talking about how is the world
whatever you want to
look?
talk about.
I mean, I told you.
My personal take is both. The world is going to look like that. It's going to wreck full employment. It's going to lead to full rate cuts and destruction by bonds.
Is that not going to happen next year?
No. But I think OpenAI is so much ahead of everyone else, so much ahead that I'm going to tell you, I never do stock taking, right? Usually I buy index funds, ETFs, and I bought Microsoft.
MSFT.
Yeah.
Why MSFT? They are not OpenAI.
But they have OpenAI, right?
They have a limited version of OpenAI.
They
do not have one-to-one stock. OpenAI is a non-profit company, and the vehicle they sold shares to Microsoft is capped at 100x of their initial investment.
Correct. But Microsoft kind of benefits from all the innovation that OpenAI brings, because they can implement.
It's like freely shared between them?
Sorry, what's the question again?
Do you think the intellectual property is going to be transferred to Microsoft directly for them to benefit from that?
I think it already is, because if you look at all the products that Microsoft is making for free, I mean, you have the Bing with the bot and everything. They're kind of already sharing it all with them, I mean, the big thing that happened with Altman being fired and then being brought back again, I think in the end was about OpenAI kind of making some, not huge, but they discovered something and probably didn't share it with Microsoft for a few months, and that's why all that turmoil happened. I think that was it.
I mean,
But
there
in the
were
end,
rumors about that as well.
I think they're sharing intellectual property. I think Microsoft is going to benefit hugely from all of it. That's my take. And when I saw how behind Google is, in my opinion, I don't know.
Okay, then.
Well,
Let me. Yeah, go ahead.
So you think Google is so behind?
Yeah, it is. Because I mean, it doesn't grow exponentially. I mean, if you throw a lot of money at it, you don't get much results here. This is kind of a different field from what you had, say, in the early 2000s, when you had a huge bubble popping and then all the tech going up. Everyone was doing great. You know, if you had Google, Microsoft, big tech's going to do well. But I think this time it's going to end up with kind of a one of two companies actually doing well compared to the previous cycle.
So you think OpenAI's technology at the end of last year is better than Google's current technology?
Yeah, it is.
So you
100%.
think even it's not like a year difference, it's like an actual technological difference. It's not a time difference.
Yeah, it is. I mean, when I see Google, I mean, when I think about what they do with their products, they kind of try to meddle with everything. They try to launch their social network. I mean, they don't want to.
Oh yeah.
They try to
half-assed
change
products.
things. They kill products really fast if they have to. I mean, they're a software company. It's actually good for them. They kind of behave like a startup. They don't mind. And I'm seeing kind of the same things here. I mean, when they start kind of changing names, launching Bard, and then you have different models. They release this trailer, heavily headed the trailer, calling their models Gemini, and then is it Bard or is it just a model for Bard? I mean, there's a lot of confusion. I don't think they kind of have a vision right now for AI, for where they want to go, you know. Whereas I think OpenAI, they're very close to AGI.
Yeah, fair enough.
I mean, that's my take. And if anything, if you want to buy a company that's gonna kind of profit from that, it's Microsoft right now.
They're so fucking expensive, though.
Yeah, it is.
The question is, what is not expensive right now in that field, right?
Yeah, that's what I wanted to ask. Okay, let's distill the AI question into two components. What do you buy to benefit short term? What do you buy to benefit long term? Okay,
My opinion is just
thinks Microsoft.
That's a good question, though.
three things: NVIDIA, Microsoft, and Google. Just buy those three. One of those three is gonna rocket anyway, right?
Microsoft, Google, or NVIDIA. Well, you're covering all your bases. The fuckers are super expensive, though.
Yeah, of course. But if AI is really going off like you say, those three are gonna rocket anyway, right? I mean, NVIDIA probably anyway. Even it doesn't matter if Microsoft wins it or Google wins it. And then it's just a question between Microsoft and Google, in my opinion.
I recall last year when we were discussing this with my chair is making itself known. Last year we were discussing this. We were just focusing on the U.S. market. Okay, maybe like Captain says, the software aspect, nobody can do it better than OpenAI. Can nobody do it better and cheaper than NVIDIA, though?
The problem I think you have there is, first of all, capital investment requirement, because making chips is not as easy as it looks and sounds, right? So you have to put quite a bit of capital into it to get something started. That's the first thing. And I think technological, advancement in NVIDIA is just, they are so far ahead of everybody else in the market, in the chip market. They're just dominating the market.
Is there nobody in China who can do it better, cheaper, and who has government support? Because I heard something like that toward the end of last. I just cannot recall the name of the company that I was given. They cannot do it better. No, they cannot do it better. They can do it cheaper, maybe twice as bad, but maybe if 3 times as cheap, nobody cares. You can just buy twice as much as you need.
But however, if you don't recall the name, it's a bad signal for that company. I mean,
no, I
you
didn't
should
do my
have.
research.
Yeah, but you have to research in order to get the company name. I mean, everyone knows NVIDIA. Everyone knows Google, Microsoft, Alibaba.
Yeah, but if they start doing well, people will learn the name, People,
yeah.
Maybe the brand is not built yet, so maybe it's a cheap time. Maybe it's not expensive right now. Maybe it's going to be expensive in the future. Maybe this is the point of opportunity. Nobody has a name like that. Like, that's something that's not super expensive already.
I think the problem is also about resources. Like, chips are expensive to make, and you have to have those the minimum resources to build it.
You already have to be gigantic to be in the space, is what you're saying.
Yeah.
Just the same as the AI technology.
Yeah.
You need to be really big in order to play with it.
Yeah.
It's kind of the same as the telecom sector. You have to be in the sector, or you're just not gonna make it. Oil sector is just the same. If you're not in the oil sector yet, you're not gonna make it into it. In no way.
But when you talk about NVIDIA, it's not about the ability for competitors to, I don't know, build more chips, cheaper chips. NVIDIA has kind of a proprietary software, which is unparalleled as far as I know. When you use those chips for AI training, that's their main selling point right now. In the end, all these companies, even Tesla, those are software companies. Forget that they are producing cars. Tesla is a software company. And when you talk autonomous guide, everyone else is behind, right? And NVIDIA is the same, I think. I think you're buying software when you're buying NVIDIA, rather than the capacity to produce cheap chips, I think that's my take. Because I think companies like Intel or Qualcomm, AMD, they have they can compete with NVIDIA. They could. Why not? But in the end, NVIDIA is better at providing companies chips and software for AI training, and it's going to be huge for the next 10 years or so.
They're fucking so expensive, though. I cannot stomach buying at this price.
You may think they're expensive, but probably they're just fucking cheap for the next 10 years, right?
Yeah.
Let it happen.
Think about Amazon 5 years ago.
Yeah. Think about Tesla.
Tesla.
Tesla was cheap at some point. Like, I was thinking about buying Tesla before everything took off, but I missed the window. I actually liked Tesla stock at some point when it was 120, 220 before all the splits, before any of the splits happened.
Yeah, but everybody thought 100 it's just too expensive, nobody's gonna buy it, and then it took off to 400. Right?
Oh yeah.
Same could happen with NVIDIA as well. Still,
it could happen, but let it happen without me, like I said.
Of course.
I'm gonna be here in Georgia doing my thing.
Yeah.
But I think if you want to make money, if you want to make money with AI, I think Dom is right. If you're buying NVIDIA and Google and maybe Microsoft, yeah, I think you're set. You don't need anything else.
We just come back to the Magnificent Seven, but we just got to kick off Meta and Tesla. on that shit list. Who else is left?
Who
Is
else is
Netflix
left?
still in there?
Amazon, I think, and that's it. But
Amazon.
it's not.
Oh yeah.
Yeah.
Apple. Jesus fucking
Oh yeah,
Christ,
Apple.
Apple. My
Yeah,
God.
Apple's
Apple.
always a good investment though. They're like the blue chip, safe bet of the sector.
Just forgot the largest company by market capitalization. Just
Uh,
huge.
are you fully discarding Meta in the AI world?
No, I'm not. I'm really not. I just don't like Meta. I have bias.
Okay.
I think they could be
Okay.
great. They're a software company. So
They're trying
right
to
now,
focus on the metaverse though.
I mean, their shift, it kind of didn't work out so far.
Didn't yield anything.
So,
yeah.
So
I mean, they might as well rename themselves AI and buy that ticker from that AI company like C3 AI. At least that's gonna work out better, I think.
Jesus.
I mean, do you guys remember Zuckerberg kind of releasing the trailer? I mean, with kind of it looked like a 2D video game where people
Dude,
kind
that
of.
was so bad. The production value was so low on that shit.
I mean, they pivoted to this thing, right? I mean, it looked like NFTs and the metaverse was going to be huge. Maybe it's not going to. I don't know. But it looks
why
like
should it
they're
now suddenly take off though? Why?
Why should it take off or shouldn't it?
Yeah, why should it suddenly take off now? I don't see it.
I don't think it will, and I don't think it's going to be relevant. But
they're still living on Facebook, right? They're still living off by making money on Facebook and Instagram.
Facebook is the one making the most money with advertising.
Who still uses Facebook?
No.
I mean,
not me.
I mean, older millennials and onwards. I mean, the majority of the world, I guess. So
we are in that age group. We are not the youngsters anymore. None of us are. I don't think.
I mean, people 40 years old and older. They're using Facebook
they
a lot.
are the people with money, so I suppose it's fair.
Yeah,
well,
advertisers. I mean,
they still got Instagram, right? I mean, that is huge, right?
Yeah, that is.
That should make a lot of money.
They bought it like for $1 billion, right? They bought it very cheap.
Yeah, pretty cheap.
Yeah, in 2013 it was a steal. I mean, it was pretty good. Yeah, but if you're talking about AI, I think Meta is going to do great. I just don't like Meta. They have a great open source.
I mean, if they actually do shift focus to AI, that's going to be a worthy goal, but they're just going to look like double fools now if they do that.
I think they're going to implement it into their advertising strategy, and that is going to do well, right? It's kind of same as, let's think about, let's say Microsoft is bringing out the best AI in the world, right? Google is still going to do good, not because they get some share in that competition, but because they're going to implement it as well into their advertising sector.
Mm-hmm.
So they're still going to do good, in my opinion, right? So just those three companies, in my opinion.
What's the Google price at now? $140. Yeah, that's not right. Okay.
We have to talk about mining companies going forward. I don't know why you're not looking more into it, Talion. I don't know.
Copper mining? Or
just
mining?
Everything mining, not just copper, but just everything, not just raw materials. Going forward, that is what I think is going to do great. Mining, especially because
why general mining?
Well, we all need raw materials, and if there is going to be, some revolution in AI coming, we're going to have a lot of infrastructure to build in the next couple of years. A lot of it. And we need a lot of raw materials just for that. right? And you're also going to think about the margins in the mining, because those are going to explode as well with AI. Everything is going to be optimized in that industry. Everything.
Yeah, I see what
you probably
mean.
don't
So
need
that could
any
be a good
effort
long-term play on AI. That could
It
be a
is.
good
It
long-term
is.
play
It
on
is.
AI.
Not only on AI, but just generally. But AI is going, would just top it up.
Basically, a technological revolution that requires big new infrastructure. Any new
Of course.
technology that does that.
Every revolution is gonna need
How about
a lot of raw material.
longevity? What's
Sorry?
that gonna do? If
What?
we find a miracle fountain of youth.
I mean, even adding 10 years to the average lifespan is going to be dramatic. It's going to break all the social welfare system we have.
That's why
society
I'm buying land.
Yeah, you need land. Definitely. It's going to be fucked up.
It probably leads to war. Quite a bit of war.
I know.
That is my take. Probably.
But it's not going to happen in less than, say, 20 to 30 years, I think.
And especially not for everybody. It's not going to happen that everybody in the whole world is suddenly going to live 50 years more, right? That's not going to happen.
No, but even if you have like the average lifespan going to 100 years, which is not that far away, I mean, it's going to be the end of all the social welfare systems.
Oh yeah.
You're not going to be able to sustain pensions and everything else, healthcare, whatever.
If we find an alternative to means of production that doesn't rely on humans like AI, then that can happen, and there's nothing stopping it,
Yeah. But now you need something like China did, like the one-child policy, everywhere.
Oh yeah. Well, we'll need some kind of permits to have children. Like you cannot live longer than X number of years if you want to have children. I'm good. I'm never having children, so I don't care.
Never say never.
I will say never. I'm never having children. I know that for a fact.
Yeah.
You're missing a lot of fun.
Yeah,
I'm sure I am.
Oh yes.
Okay.
No, but making money on that.
Anything else anybody wants to discuss? We went through everything I had written down. Anything else anybody wants to?
To be honest, go ahead.
Do you believe quantum computing can change anything, either on Bitcoin,
Not particularly.
AI?
No? I don't think so.
No.
It can be a very niche field. It's applied to a very specific, very niche field. It can help with some things, but I don't think it's like that big of a deal.
Okay.
I mean, in terms of improving in some fields, it's going to be huge, but it's not going to break cryptography. I think you're kind of talking about that.
I mean, we're just going to transition to quantum-proof cryptography, and that's going to be that.
Exactly. All algorithms are going to be quantum-proof, and we're going to move on. I mean,
people are already talking about it, Actually, what's happening is some groups are capturing all of the encrypted data that's flowing. Sensitive data that they cannot crack today. But they're still capturing and storing this data. Because when the quantum computing comes and when we crack this data, even if it's old data, it's going to be useful. Like, imagine you can have access to CIA data going back 30 years that they have not declassified. That's still going to be useful to enemies of the United States. So that's why there's a lot of effort by a lot of entities that are like collecting and storing encrypted data. They cannot crack it, but they're still storing it. They're betting that when the quantum computing breakthrough comes, they're going to be able to crack it and they're going to be able to use it. And that's why actually legislative process to move to quantum-proof cryptography is already underway. I think it's already being discussed in Congress in the US.
But is that even possible?
Yeah, it's easy. It's not that hard. Quantum proofing is not that hard.
No, I agree. It's right. That is right. That's correct.
I mean, already the methods exist. You don't have to reinvent anything. You just have to implement it. You just have to adopt a new standard.
And people underestimate how hard it is to operate these computers, kind of, consistently to do that. I mean, most people don't understand how quantum computing works. It's really, really hard.
It applies to only very specific and niche fields. It's not like general computing where it can execute like a sequential task. No, it just solves a big math problem.
Yeah, I mean, our bet on AMSC, I don't remember the ticker anymore.
Yeah,
I mean,
AMSC,
last summer.
AMSC.
Yeah, if that did work out, maybe we could have quantum computer room temperature and something like that. Would have been a game changer. I mean, completely different conversation. But it didn't happen, so. Yeah. Yeah. I was up. I can say it now. I mean, I was up kind of like 5 figures. I mean, a bit less than $50,000. So, I mean, I was running for free because I took profits in the beginning, and so it was a free ride, but still, it kind of
I was up 7 figures at one point. And I was all going down the drain.
Yeah. I mean, I have to thank Talion. It was a great couple of days. I
traded in Rust during your holidays.
It was probably one great day, not a couple.
Fucking wild. Fucking wild.
Jesus.
Yeah. Talion, I like that you came, you started this conversation with the list and everything. It's so organized. It's kind of,
I had prepared what to do.
I mean, after you sent the picture of the wine, I expected you to be drunk and everything, and you were very collected.
No.
Very
I sobered down
collected.
after that. Okay, let me show. But I sobered up.
No, very prepared, professional, collected. You had the list, and we went through all of it.
I'm just at my desk.
Now the floor is for everyone.
Anybody, anything else? Otherwise, we can close it down for the day.
Yeah, I think.
All right,
I'll wrap up.
As a no. All right, guys.
Yeah.
I don't think we have any ladies among us, so gentlemen.
That was a really good and informative.
Great content, guys. Great content.
Yeah.
We will repeat it maybe at some point in the future if we have anything interesting to discuss at that time.
Yeah, for sure.
Great.
All right, everyone. Happy upcoming New Year, and goodbye. Have a good weekend.
All right, thank you. You guys have a good rest of your year.
Happy New Year, guys. Happy New Year.
Nice to meet you.
Peace.
Bye, guys.